Jesus! Morning, Pope. Okay. I missed that run up. Damn it. Rolled out of bed, boys. What is this spread?
You smell that? What is that?
Xylez. What'd you trade?
No.
Freaking coming at us hot here.
Opportunity. No.
I'm not even awake yet. Hot damn. I don't even have everything up and running yet. NA. Jeez, what was that?
I've been less active for a little bit. Did I miss anything? Surely nothing major happened while I was gone, right? Where's Gran?
The hell? Freaking parrot. Got Daily Cock on SBet. RGC's halted up. Yeah, that could be one to watch with that crypto stuff. What is this? 51? Oh, of course. Freaking 49, piece of shit. Oh, come on. So close. Hims is using, huh? Core Weave, red to green. Watch that one. Oh, come. Yeah. There you go, big boy. Juices as soon as I get out. Okay. Okay. Okay! I sold into you. I appreciate your sacrifice. That is an insane move on oil. INM. Old name, huh? All right. This RGC daily is interesting. This is not going to open, is it? 39:44. Supposedly 30 seconds here or so.
I drop bombs, symbolic of course. What's that? A ceasefire I see. Let's hope Habibi doesn't get freaky. I'm tired of the sand. Can we go back to the days of glass in Japan?
Oh my gosh. Alright, 10-minute halt on this. Freaking urinal. Damn. This thing
Is
just
World
no
War
chill.
III over? So disappointing.
Holy shit balls. Those were my fills? Alright, what? That was a nice move. Damn. Hymns looking for high day. Core weave. Excuse me. The way for that circle to pull back, but jeez. They ain't juicing, but Tesla juiced pretty hard yesterday. We're near yesterday's close, so let's see if this finds any kind of resistance or support. Zero, I just saw your message. Like, Circle, are we talking about yesterday? Yeah, Circle got the 298.99. It did not break 300. Let's get that shit out of here. Him's doing a little compression here. Old. Well, I almost had it. Yuck. It's got the cuck, but it really needs to get that 81 break. I don't know if it's going to do it. Nope. Oh, SJ's in it. Yeah, go break 43.50. Go do it. Some bitch. There's break. RGC open. So the daily cock, I'm getting a little higher, honestly. Did I just top ticket? Almost. Send it. That's a dip and rip. Do it. 33. Yes. Yes. Oh no! Oh! What does that fill? Come on. All right. I don't even know if I made money on that. I think it's break even trade. Not moving like it used to, but still moving, I guess. Uh, SBET's got some levels here if it wants it. I literally typed in SBET. So you got this and this with a 5-minute. 32. He needs a curl with the break. All right, you broke one level. Pretty heavy. Support. Again, if it wants it. Nope. Coral weave. What an animal. RGC 1 minute. I&M. What are you doing? Oh yeah, Powell's on in front of Congress today, isn't he? We'll have to watch that. That should be fun. Circle with a W. Damn. 62? It's not where I wanted to get filled. $1.50 spread. What am I supposed to do here? Jeez. This thing's... I don't know if I made money on that either. Thing is wild. Core weave 1 minute. Robin. Damn. Oh my gosh.
Missiles still flying, Habibi still crying. They call Trump the penetrator, making holes and dropping loads, all while saying fuck the haters. There can only be one goat, and we know how they treat those.
The penetrator. Habibi? Is that what it said? AREI, yep. 785 levels big. Circle still hanging out. Core wave doing a 1 minute. TAIC. Wow. Coral Wave, nice 1 minute. Dude. Wow. That was a crazy DAIC move. Jeez. RGC out of the halt is moving up. We've seen that a lot. Anybody? Anybody? Thought this was gonna have a really good day. Hood, absolutely crazy. What's up, Big? Oh. Hood setting up a 1 minute. Oh. Freaking Jake. EYEN from yesterday. WHLR Daily Cock 725 level. Could be some. Jeez. How did it shit, this thing's just taking a, I mean, absolute poopsicle here. Jeez.
Mass attack
Are
starts
you
in
freaking kidding
5,
me right now?
4,
I'm on in I'm in an amazing
1.
trade and I'm getting this juice in my face. All right, let's go. Do it. Do your worst, boys. Come on. Come on. Are we even green? $800. Okay, we're green. We're green, boys. We're green. Come on. Let's go. Get it in. Get it in all over my face. Xylas, during this 2 minutes, certain effects are free. Just scroll down and look at it and figure it out. Should say something different right now. I don't know why you guys don't YouTube this stuff. Or ChatGPT. You literally have AI that can help you. Come on, boys. Get it in. Get it in. Throw bro. Zero. Get the last ones in. The hangover ones. There it is. Boys, remind me. We'll watch a freaking YouTube video. How to do the view. Oh, it's so freaky. So freaky. Are we going to do another OKLO and underneath kind of plays here? Is that what we're doing? Hmm. 96 and 10. Coin. Oh my gosh.
was a lord of a faraway land. Farquhar was his name. He had a girl.
Oh my gosh.
Many cooks from his butt. He stuck with his old lady eater till the end of the world.
It's not even a song. Damn! That looked like a short squeeze stack if I've ever seen one right there, boys. You see that bid? Gotta keep an eye on that, see if that sticks around. Getting songed and shit on, and I'm freaking making money because I'm a professional! Run! 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 That coin trade was a little bit of a W setup. That's what we were looking at there on this one. And this little false breaker right here that I was playing for. So as we came back down, tested the 9 EMA, bounce it back up. As we're coming through this, I'm going to go long. So I'm looking for this to propose through high a day, maybe a whole dollar. We got all that, and I sold. Bada bing, bada boom. Nips are hard. S-Bet coming back out. We were just watching that one. S-Bet 1030. Circle trying again. Coin juicing. And anybody want to play Moss? It's hitting again. I wouldn't feel like getting throttled by that. Where's the link for Powell? I want to watch this. There it is.
Constituent space back home. This hearing is particularly timely a conversation as the Fed wraps up its 5-year framework review, including a thorough look at the consensus statement, communication strategy, and other guiding policies that will have a profound effect on the lives of every American. Many of these topics we'll discuss today we've taken a closer look at in the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force. I look forward to building on these conversations here.
Discord.
One issue that I think warrants special attention is the binding nature of the
SLR
and ESLR
Sometimes
Treasury Market intermediation. I'm glad to see the Fed is looking into this tomorrow, and I hope we'll see meaningful action soon. Chairman Powell, thank you for being here. It's critically important that Congress and the central bank have an open dialogue. Transparency, accountability, honest communications are pillars of our system's success. I look forward to your testimony on the state of the economy and the Fed's plans for the future. And I yield back, Mr. Chairman.
I don't know why it's not coming through.
I recognize the ranking member of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Vargas, for 1 minute for an opening statement.
Remember some
Thank you very much,
commentary,
Chairman
continued
and Ranking
commentary
Member.
by
Thank
Trump,
you,
this time in
Chairman
regards
Powell,
to the big,
both for
beautiful
your years
bill.
of public service and for
Those
being
comments
here
in
today.
the news
Since
desk.
1977, the Fed has been tasked by Congress with its dual mandate
Why isn't it
goals of
work?
achieving both maximum employment and stable prices. Unfortunately, this
All right, I'll have to
administration
look at
has
it
made
later.
accomplishing
It's
these
got the
goals
right
more
input.
difficult.
It's just
In
not
the Fed's
coming through.
most recent summary of economic projections,
It's
we
weird.
see a forecast for slower growth, stickier inflation, and rising
This happened like that
unemployment,
before. I
all
had
of
to
which
reset
point to a
everything.
potential stagflation scenario. Whether it's the president's indecision on trade policy, his hiring freezes impacting the collection of economic data, his ballooning of the deficit to cut taxes for the wealthy, or his name calling, all of these actions make it tougher for the Fed to do its job. I look forward to your testimony today, Mr. Powell, Chairman Powell, and I yield back with that.
Gentleman yields back. Today, we do welcome the testimony
Thanks,
of Honorable
Hunter. I just
Jerome
didn't
Powell,
see you
Chair of
say
the
it.
Board of Governors of the
Sure
Federal
they
Reserve
were.
System.
I was
Chairman
messing
Powell,
around
we
with
thank
some
you for
settings
taking time to be
yesterday,
with
and-
us. You'll be recognized for 5
Yeah.
minutes to give an oral presentation of your written testimony, and without objection, your written testimony will be made part of the record.
Really
Now
screwed up my
recognized for
audio. Thought I fixed that, but apparently not.
Mike.
Thank you, Chairman Hill, Ranking Member, and other members of the committee. It's great to be back here today. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. We are attentive to the risks on both sides of our dual mandate. I will review the current economic situation before turning to monetary policy. Incoming data suggests that the economy remains solid. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP.
Can they fix his microphone so it doesn't sound like he's going to get
investment and government spending grew at a solid
reverb
2.5% rate. Within PDFP, growth of consumer spending moderated, while investment
I've entered my
in equipment and
6-year-old
intangibles
son
rebounded
into this
from
nature
weakness in the
contest for a
fourth
chance at
quarter.
$20K to meet Jeff Corwin.
Surveys of
He
households
featured
and
in a magazine.
businesses
I don't know
have
who that
reported a
is.
decline in
If
settlement
he makes it
sentiment
through this
in
round,
recent
he'll
months
be into
and
the
elevated
quarterfinals.
uncertainty
What the
about
hell, Rip?
economic outlook, largely reflecting trade
What?
policy concerns.
What's the competition? What does he got to do?
These developments
Freaking
might
need to
affect future spending
get him
and
juiced up on
investment.
some steroids or something.
In the labor market, conditions
If you
have
ain't
remained
cheating, you're
solid.
not trying, right?
Job gains averaged a moderate 124,000 per month in the first 5 months of the year. The unemployment rate at 4.2% in May remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators
Of course,
suggest
I got
that the
filled
conditions
right
in the
at
labor
30.
market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow longstanding disparities in employment and earnings across demographic groups. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total personal consumption expenditures, or PCE,
Come on, do it!
2.3%.
It's this 10:30 level. If it looks like it's going to go, I'm going to add.
Excluding the
Watch it
volatile
just
food and
jump
energy
right over it.
categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. With the labor market at or near maximum employment and inflation remaining somewhat elevated, the Federal Open Market Committee has maintained the target range for the federal funds rate at 4.25% to 4.5% since the beginning of the year. We've also continued to reduce our holdings of Treasury and agency mortgage-backed securities and beginning in April, further slowed the pace of this decline to facilitate a smooth transition to ample reserve balances. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Policy changes continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity.
Can I not get filled to that freaking level again?
Reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that would depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. To conclude, we understand that our actions affect communities, families, and businesses across the country.
Coin
Everything
consolidating.
we do is in service to our public mission.
No, my audio through
we can to achieve our maximum employment and price
my
stability.
audio is not
Thank you.
working
Look forward to your
in
questions.
Discord, and I don't.
Thank you, Mr. Chairman. We'll now turn to member
want it.
questions. I recognize myself for 5 minutes for questions.
SSSS,
Over the
Zero
past few
Capital
weeks,
shares
Let me
right
see
now
here.
on the
Democratic
highs,
colleagues have suggested the
$8.42,
following:
up about
after the
15%.
initial release of the
report
GDP
that one of
report,
their
the president
portfolio
is driving the
companies,
economy
Uber
into
backed
a recession. Chairman
Lime,
Powell,
Fix
the
it.
latest
Electric bike startup
FOMC
Lime,
statement
has filed for
described
its
economic
US
activity
IPO.
had to
That's,
continue to expand at a
Sandy,
solid
Sandy,
pace, and you
Sandy,
just
Sandy,
reiterated that in
and
your
UBER.
testimony this morning. In your view, is the term recession and the economy
Test,
growing
test,
at a
test.
solid pace? Are those synonymous with each other?
I would say no.
And you note that the labor market continues strong, the economy's at a standard pace, and you also referenced in your testimony that first quarter GDP initial react was also from front-end loading, as you noted, imports to try to avoid tariff impacts. Also, I looked at the Atlanta Fed GDP Now model, which forecasts GDP growth for the second quarter of this year at nearly 4%, with core GDP forecast at 2%. Does that Atlanta model suggest a recession?
Powell says the U.S. is not
I
in
would
a
say that.
recession.
So, in looking at your remarks about tariffs today, and then the ones that you made during March and April, I was looking back at a Fed study that noted that up until March, tariffs have already been partially passed through in consumer prices, leading to a contribution of merely 1/10 percentage point increase in core PCE prices. And a Harvard study last week showed that prices have only modestly adjusted
Headlines
since the announcement
that
of tariffs.
Microsoft is planning
Finally,
major
the longer-term
Xbox
inflation
layoffs
expectations
next week.
remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts, provided that average effective tariff rates remain close to 10%, or I assume he means 10% or lower. The labor market remains solid, prices continue to disinflate. So given that data I've outlined, I'm sure data that you're very familiar with, for the economy to avoid persistent inflation, do you concur with Governor Waller that there is a pathway for good news as it relates to the regulatory policies, the tax policies that I've discussed in a world with
PONY, Pony AI, popping here to the highs, up about
First, I wouldn't comment on
12.5%.
any other FOMC
Papa Oscar,
members' comments
November
one way or
Yankee.
the other, but I will say this. I think many
Test.
paths are possible here, and certainly the
All
one
right,
you
I think I got it
mentioned
figured
is
out.
possible when we could see inflation come in not as strong as we expect.
Somehow,
And if that were the
my
case,
Stream
that would
Deck
tend to,
mute button
suggest cutting sooner. We could see the labor
is
market
screwing it all up.
weakening, and that would also
It's like a plug-in.
suggest cutting sooner. On the
FDA
other
is
hand, if we see
actively
inflation coming in
evaluating
higher
whether
or
to
if
Yeah,
proceed
I
with
gotta
advisory
work down
committee
that.
On
No.
CAPR,
remain strong.
seeing a
Delta
little
International
volume in the
AJ
name.
spokesperson.
Talk
the range of
FDA
possible
actively
paths are
reevaluating
possible,
whether
and
to
certainly the one
proceed
you
with
mentioned.
advisory committee meeting for Capricorn.
In February of 2021, you
Fed Chair
told us
Powell
in this
said U.S. is
committee
not
that
in a
you would stay
recession.
in your lane and not comment on
Many paths are possible.
President
Could see
Biden's
inflation
proposal
come
for the American Rescue
in
Plan or
not as strong as
sharply
expected.
increasing federal
If that's
spending.
the case, we should just cutting sooner.
And, you know, you said it was an issue, but that you would
Also,
stay in your
weakening
lane
labor
and not
market would
comment on it.
suggest
But
cutting
here in
sooner.
this
If
year, you
inflation
have
and labor
commented
market
on
strong, could cut
this
labor.
idea of tariffs being set by the executive branch. So are tariffs in your lane, but a huge fiscal spending by the Biden administration not in your lane? Explain to the committee why you chose to be silent in February of 21, but outspoken this spring.
Sure. So we haven't commented, and it would be inappropriate for us to comment on the policy of tariffs. We don't have a view.
Fed's
It's not
hammock
our job.
says latest inflation
Why is
readings are
Uber juicing?
discouraging.
And just as we wouldn't comment on the reconciliation package that you're working on right now.
Why is Uber
We're not
juicing?
commenting on tariffs. What our job
Is this juicing just because it's the
inflation,
market?
keeping inflation under control.
Or is there news on
and
it?
Also keeping maximum employment.
That's
And
the
when
Cleveland
policies
Fed
have
president.
What appear to be
Is it pony?
That's hammock.
short and medium term implications, meaningful implications for that, then they kind of, not the policies themselves, but the inflation becomes our job.
Yeah. You know my views on price stability. I think it's a first among equals in your dual mandate. I've argued for that. I've introduced legislation to make the dual mandate the sole mandate, and we've talked about that before. But I was very curious about your thoughts on former president of the Cleveland Bank, Loretta Mester's quote that I read from last fall. She says, "I think that maximum employment is the maximum
Waymo in
level of
Atlanta.
employment consistent with price stability." In other words, she elegantly
we
ties
just talked
that
about this
together,
yesterday,
that
how they're
price
going to have to
stability
latch
so you
on
can have more control over rather than
to the self-driving
all
thing
these other
one way or
factors that
another.
enter the employment
That's how
picture,
they
like
do it.
legislative and executive
A
branch.
report
What's your
Iran's
thought about it?
president says
I
Iran
personally
will
think
not
that's a very
violate the
reasonable way to think
ceasefire
about it.
unless Israel
Thank you
does.
very much. I yield back. The gentleman from New York is recognized for 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Chair, Chair Powell, and thank you for being here. Last week, the FOMC decided to maintain the target range for the federal
Crude right
funds
now
rate
down
at
about
4.25%
4.5%
to 4.5%.
at
While I was not
65.44 off the
surprised
earlier
by the
lows.
decision to hold rates steady, I was surprised by the committee's revised forecast since March, which
More highs on
represented
Uber
a
now of
decrease
about
of
6% for Uber.
0.3 percentage points
90.28.
for GDP, a similar increase for core PCE,
Shares of
and an
Lyft
uptick
off the
in
highs
the
up about
unemployment
4.5%,
rate to
$15.64.
4.5%. Can you
LYFT.
explain the incoming data that the committee has seen since March that caused it to make these adjustments?
See you, Bishop. It's been a rough week.
First of all, these are individual. This is not a committee forecast.
And by week, I
It's
mean
just
yesterday.
individuals submitting their
I
own
worked
personal,
from 6
forecasts. And
45
Powell said we don't bless
to
individual
4
forecasts as
o'clock.
a committee.
I think people are looking at the incoming data and having a
It's
range of
10
different
hours.
judgments. If you look at
They
the
made
range, if you look
$200.
at the,
So I feel you.
The central tendency, you'll see that it covers quite a wide range. Those are the medians that you're talking about. I think so. Inflation is projected to have moved up because of what we've seen.
Chilling. I didn't see your
particularly from
comment.
tariffs. And I think if you look at other
Hey, I want to
sector
start
forecasters,
using
you'll see very
Trader's
much the same
View
thing.
to start
And
trading.
what
I'm
data
beginner
are you looking for?
want to start understanding how to
When we
assess
look
day
at the
trading
incoming
tips.
data
And,
on,
yes. First off,
we look
check
at
out my
the-
YouTube.
At our own forecast, and we ask
It's got
ourselves,
plenty of
what's
videos
likely
on
to
there.
happen? Monetary policy has to be.
They're old,
looking, a
but they're
forecast is a
relevant.
prediction of what's going to happen in the future.
So
Thank you.
this is what you need to do as a beginner. We talk about this often. I swear we have a clip of this somewhere.
Of incoming data and adjust the stand of monetary policy.
Don't we have something?
Appropriate. Some analysts predict 2 rate cuts by the
I
end
could
of
have
the
sworn
year
we had a
are
clip.
still on the table.
Okay.
Is this a fair and accurate assumption?
So
Data will
this is what you got to do first. You got to figure out what kind of trader you are. What do I mean by that? You've got to figure out, are you a day trader? Are you a swing trader? You know, what's the time horizon that you want to work with? And a lot of it has to do with 2 things. Circumstance, do you work? Can you sit at your computer all day or not? And the other is just your emotional and mental appetite for, you know, putting money into the market and or walking away. For me, what I mean by that, I used to be a swing trader when I started. Put money in, go to bed, wake up, see what happens. I couldn't do that. I would wake up every 2 hours, check my phone, see where, where it might be opening up at, 6 o'clock rolls around. Where's it at? Where's the overnight session moving this stock? 7 o'clock, 8 o'clock. I mean, just couldn't sleep. So that didn't work for me. Day trading's where it's at for me. I play the minute chart. That's the speed that I like to go at, minute and 5 minute. At the end of the day, I'm all cash. So if, something crazy like Israel and Iran get into it, I don't know, that may or may not happen. Or something crazy like the U.S. drops some bunker bombs on some kind of, I don't know, nuclear plant in a faraway country. Something like that happens. I'm all cash and I don't care. That's, and I get to sleep at night. That would never happen, right? I know. So that's why I'm a day trader. And from there, you have to pick. There's still things that, regardless of what kind of trader you are, you have to learn. You have to learn candlestick patterns, how to read candlesticks. When I see this one, what does it mean? When I see this one, what does it mean? Where's my little thing? What does this mean? What does this mean? Why is it green? Why is it red? Just the basic stuff. And there's all YouTube video searches. There's bazillion videos on this stuff. So what do candlestick mean? What are support and resistance areas? Like if I look at this and I say, okay, maybe there's a level there, there's a level there. Connect the dots. It's just basically getting good at connecting dots. That's basically what it is. From there, chart patterns. And then you're going to watch tons of YouTube videos on how to day trade. And you're going to get everybody's strategies that they use. There's not one right way to do it. The right way to do it is the way that is a strategy that you can replicate over and over again with a high level of success or a decent level of success. And you practice that strategy. It might be part of a strategy that you watch someone else use and you like to tweak it a little bit and you play with it on paper. You're paper trading this whole time. By paper trading, I mean monopoly money. Fake stuff, like a video game. You're not using real money yet. After you get a strategy developed, and you're good for like a couple, 3 months, practicing it over and over again, recognizing when it works, doing the right thing when it works, doing the right thing when it doesn't work, i.e. stopping out quickly. Then you move into real money because now you got to learn the hardest part of the game, and that is the emotional side. When you go real money, you're going to start off with 1 share. And if that feels okay, 2 shares, then 3, then 5, then 10, then 20, then 25, maybe 50. And you scale up over time. This is a slow process. All right? Because this whole time, you're going to have to battle the hardest part, which is the emotional side of trading. You're going to have to figure out, what does it feel like when I'm green on a trade? How do I react when I'm red on a trade? When I go really red on a trade, do I do the right thing or do I freaking lose my shit? Yeah, that's the part, that's the discipline. If you can master the discipline part, you will become a day trader.
When you yourself said that fiscal policies need to be articulated before the FOMC can make a plausible assessment into their
What's up, Max?
What those will
I see that.
And I think if
Coach Red
participants having different assumptions, that would render
taking a poopy. I wonder if it's because of Uber getting into the self-driving game.
Useless, less impactful.
Hope that helps. That should give you
apples to apples. So wouldn't it make more sense for all the forecasters
a nice yellow brick road to take
policy assumptions at the same time?
And hang out here, ask questions, watch for a while, and you'll get just normal questions that will pop up and ask. This whole channel is about helping. So we make call outs for the experienced traders, and experienced traders, in chat, you'll see them call out tickers. We're trying to help each other. Not everybody can take everybody's trade, but somebody might.
So there will be situations where some people incorporate something,
and everybody else is learning. So what I'm looking at on Uber, if it gets there, right now, it's the freaking chart to work. But this is a W pattern, and I'm looking for it to potentially work.
Well, I think they do that in their speeches.
That's what I'm looking at.
Each people go out. You may have
Exclamation
listened to
point. I
speeches.
think W
guess the
pattern.
opaqueness of the Fed
I'll give you
has
the
been
clip.
something
Yep,
over
there it
the
is.
work of my 15 years on this committee.
Watch that clip, and
That's
that'll
been
tell you what I'm
debating,
kind of looking for out of this one,
uh,
if it comes up
auditing
here.
the Fed and a number of other things that have
If
gone
it comes
on.
over, which it's really not right now.
Got here a brief moment. I do feel like I need to touch on interest rates.
That coin was a nice
to be a
one.
shock, you
It's
asked how the family business was doing back in
consolidating right
Michigan.
now.
Families involved in
Hood,
sand and
looking for a
gravel
curl.
aggregates and construction and things like that. It's been strong. We need more labor.
There's a 5-minute W over 26 on Hood.
But I mean, I think there's no recession. That's been established. There's no hyperinflation, or certainly not as what some had been projecting. Yet there seems to be higher than expected, or certainly desired, interest rates for many of us. And I'm curious how high interest rates, they hurt Americans who are paying car loans, credit cards, mortgages. You had FA Director Pulte asking for lower interest rates, which would obviously impact home buyers as well. So what is it that's keeping, in your mind, the Fed from what many of us believe is the right thing?
Let's hear this. This is it. This is the sauce.
With the Bank of Canada, Bank of England, the European Central Bank, the Swiss Central Bank, a number of
What's the holdup?
emerging central banks. By the way, that's your own assessment on page 33, as where you're laying that out. Why aren't we doing what the rest of the world is doing? Is it because we're at full employment? Is it because of those tariffs concerns that you said weren't part of the analysis? Was it energy, groceries, durable goods? Why?
So,
Juice it, daddy.
that if you just look in
Juice
the rearview
it,
mirror and look at the
juice
system
it,
that we
daddy.
see,
Go for the
you can make
59
an
high of
argument that that would
day.
call for us to be at a
Or
neutral
58,
level,
150.
which would
No,
be,
no, 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 no.
a couple of cuts or maybe more.
Come back
kind
up.
of thing. The reason
Come.
we're not
Come.
is the forecast by all professional forecasters that I know of on the outside and the Fed do expect a meaningful increase in inflation over the course of this year. When I said we weren't going to talk about tariffs and inflation, that was to say until we see what the policies are. And so now we know a lot more. It's 6 months since I said that. So anyway, be happy to continue this with you.
Thank you.
Gentleman's time has expired. Gentleman from Michigan, Ms. Tlaib is recognized for 5 minutes.
Thank you so much, Mr. Chairman. Chair Powell, last month there was research published in the Journal of Urban Health that found that more than half of Black women of reproductive age, that's the term they use, in
He's
the
like, what?
county that I represent, that had experienced some sort of eviction during their lifetime.
Oh, eviction.
So
Okay.
that's
I was like, where are we going with this?
Black women in the two largest county, Wayne County and Oakland County in Michigan.
80-58 break. I'm watching on this one.
As you know, were you aware of that?
59.
No, I was not.
60.
And you know, evictions are often very traumatic experience, but also it creates a cycle.
Think Tim Waltz
of
works for the
poverty, but also
CCP.
this
What?
instability for many
Is that-
families.
is that a thing
But especially
that
when
people are
it comes
saying?
to a lot of our
I don't think
Black
anybody in
neighbors,
Congress
the
works for
access to equity,
the
the access to
CCP.
housing has diminished even more. In Michigan, we lost more Black home ownership than any other state in the country during the last recession. So we know the housing crisis, I believe, is structural, and some may say it's a policy choice. While there are many factors at play, and you know this, Chairman, high mortgage rates, the finance rates, and so forth.
100% think he does.
That
Good
drag
God.
the supply of new housing. Last month,
I hope you're wearing your
housing
tinfoil.
hit a 5-year low. Are you familiar with that?
I'm not sure exactly what statistic you are referring to.
Okay, I don't know. There was all this articles about the housing market and the impact of tariffs and so forth, and they said again it hit a 5-year low. And again, I'm getting this from a source, but
A
it
source.
sets the market up for higher inflation.
Here we go. Here's the break. Incoming.
Powell said the reason we're not cutting rates.
41,000 at 80-60. I don't know if I like my entry here. Oh, I got it. Okay.
Do you think that the way it's structured, and
Yeah.
I'm trying to understand how you're looking at this in the housing crisis, do you believe it's eroding new rental supply under construction right now, leading to high inflation in future years?
So I think there are two things.
Do it. Oh, now you go. Some bitch.
States, which there's nothing that the Fed can do about. that's not
I go to the
something
bathroom.
we can affect.
Well-
There's also, if I may say,
Uh-huh.
in the short run, rates are high, and that's going to weigh on housing activity. But the best thing we can do for the housing market, the absolute best thing, is to restore price stability so that rates come down and so that rates can be at a
But
level
don't you
that
think
people
that
can
the
afford.
restrictive monetary policy the framework you all put together undermines long-term price stability right now by reducing the supply?
No, I mean, I think
But
it
you're
restores,
reducing
restores
supply.
price stability. The point of higher rates is to, and
So
and
you don't
it
think
does
the
affect.
higher rates is impacting future supply of housing?
So I think what that does is, I think interest-sensitive sectors like housing are very much directly affected when we cut rates or when we raise rates. That's right. But that's part of the mechanism for restoring general price stability.
So keeping the high interest rates does not impact future supply of housing?
It does not, over the
I
long,
need to go back to talk to
over the long run,
women that the study.
Fed will not be, our policy will not be a driver of longer run housing supply in the United
Okay,
States.
let me ask you, what is the difference? And I'm honestly confused. I want to learn here, and I'm sure people listening to this want to learn. What is the difference between demand-driven rent inflation and supply-driven rent inflation? Like, you guys use these terminology. What is that? How do I communicate that to the public? What is the difference between
An
supply-driven
SLNO.
Sandy Lima November Oscar, the
Some
chat room
M&A talk
circulation
from an M&A
advance.
blog. That's on
Unconfirmed
SLNO,
note for
Soleno Therapeutics.
SLNO.
That there's not enough supply to meet demand, but at the same time, it also means there's more demand than there is supply.
So are you guys ignoring that?
Hearing an M&A blog says that
No,
Soleno
but
Therapeutics
as I
has
said
received
again,
takeover
our
approaches.
policies will not
That's
affect
Sandy
in the
Lima
long
November
run.
Oscar,
In the long
SLNO.
run,
I'm being
either
serious, 'cause
demand
I see
or
somebody
supply
behind you
in
kinda
housing.
I'm being serious, y'all. We're talking about a housing crisis that is getting worse right now because we're not paying attention to future instability that the current rates, and you can raise your eyebrows and all this stuff behind. I don't know. I mean, do you understand? Like, I come from a community right now that I believe is now being impacted by the current framework that you're putting together, that I do feel like it's going to be long-term effects.
On that SLNO, also seeing some activity in the July 90 call, so over 2,000 contracts. SLNO.
Be the best thing for homeowners. And
Shares of Soleno Therapeutics right now up about
long run, it's the
58
single
cents
thing
off the
that
highs.
powers
That's
the
Sandy
finance
Lima
deal.
November
Did you see
Oscar.
where I'm coming from? It is impacting future supply of housing, right?
Not in the long run, no.
Okay, well,
Gentlewoman's
Mr.
time
Chair,
has
thank you.
expired. The gentleman from Wisconsin, Mr. Stile, who's also the chair of our subcommittee on digital assets, financial technology, and artificial intelligence. You're recognized for 5 minutes.
HOTH Hot Therapeutics announcing a 100% response rate in phase 2A trial for HT01 targeting EGFR inhibitor to induce skin toxicity.
That reputational risk would no
HOTH,
longer be a
Hotel
component
Oscar
in
Tango
bank
Hotel.
exams. I viewed that positively. I viewed the reputational risk as often being a catch-all for political bias. I think it's positive to depoliticize bank exams and instead focus
NKTR,
on the core and measurable risks.
Nectar
Could you provide
Therapeutics
colors to
moving
whether or
again
not
here
any new
at the
or,
intraday highs
new
now, up
information
about
came to light that led
125%.
to the decision of the Fed to
November
remove
Kilo
that
Tango
yesterday?
Romeo.
I'm not aware of any new information. No, we just think it's the right thing to do, and of course, made an
Company
announcement on
announced
Monday
that their
under,
treatment for
Governor
atopic
Bowman's- Vice
dermatitis
Chair
met its
Bowman's
primary and
leadership.
key
Why would it not
secondary
have been done
endpoints.
previously if it's the right
That's
thing to do?
November
I
Kilo
agree with you
Tango
it's the right
Romeo.
thing to do. Why was it? Any timeline as to why that was done yesterday versus previously?
No, I think this is a problem that we came to understand as a problem over the course of the last couple of years, and began considering what's going on here. We're hearing a lot of
Much of the
reports about
DJT
banking
Delta
and
Juliet
that
Tango,
sort
no
of
chair
thing.
seen a spike in activity,
And
new
over
highs.
the course of early
DJT.
2024, came to the view that this was a serious problem that we need to address, and we've said that publicly. and now
DJT, Trump
we're doing
Media
this,
getting a
and so
pop
are
here.
the other
Delta
agencies,
Juliet
by the way.
Tango,
I
DJT.
appreciate you taking that action. I do agree that there were real political bias in some of those exams. in particular as it related to
HCHL
regulated
IPO
entities,
indicating
engaged in the
$6.10
digital
on
asset space.
94,000
Let me
shares.
shift into the digital asset
Hotel
space.
Charlie Hotel Lima.
If I can, another action recently taken by the Fed, the Novel Activities Supervision Program was ended and withdrew several statements on digital asset related risks that deterred bank involvement. In particular, you in the Fed and others at the Fed have spoken positively about the House and Senate work to regulate stablecoin in particular, a real opportunity to dollarize the globe and be a significant purchaser of U.S. Treasuries. Following that action, by the Fed. Have you seen an identifiable shift in banks or other regulated entities as it relates to engagement in the digital asset space?
You know, I wouldn't be the one to be picking that up first, but what I do see is
1.1 million
a very
shares
significant change
offered
in
in
the
that offering
And it,
for
you know,
Happy
really
City
does reflect
Holdings,
evolving
priced
thinking
at
and the
$5.
evolving status of the crypto industry. And I would expect over time we'll see more activity.
How is the Fed evaluating and overseeing banks or other regulated entities that are in the digital assets or crypto space?
So our view is that banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies. And banks are also free to conduct crypto activities as long as they do so in a way that is, protective of safety and soundness.
Thank you very much. Let me shift gears because I want to give you just a little bit of an opportunity to comment on the housing sector once again, but give you a little freedom here to speak to that area. You correctly are trying to balance inflation and price stability, but also higher rates have a significant impact on the housing market as shelter and housing costs are a significant driver of why many families can't afford the things that they need. Could you provide color as to how you're analyzing the impact that housing and shelter costs have on families and on inflation with your desire to maintain price stability at the interest rates that is currently set by the Fed?
Sure. So, we realize that people are feeling high housing costs and high financing costs. In terms of inflation, we look at something called owner's equivalent rent and rentals, and that's meant to capture both rented housing and owned housing. And it's been very sticky. It's been one of the stickiest parts of inflation. I'm happy to say now it actually is coming down quite regularly. That's very good news. That's been the part, really it's been the service inflation that's been stickier than other parts of inflation. So that's good news for people, I think, and it is showing through into measured inflation now. Again, in the long run, the best thing we can do is restore price stability and let the market work. Even then, though, we're still going to have a housing shortage.
What data do you think is leading to the reduction in the rent equivalent?
I just think it took time. So the thought is when you would think that if rents come up every year,
Powell said banks are
would
free
take 1
to
year or
provide
2
banking
years
services
for
to crypto industry,
the lack of
conduct
growth in
activities
rents to
as long
show
as
up in a lack of
protect
growth in
safety
housing
and
prices.
soundness.
It turns out it takes 4 years or 3 years. If you're an existing tenant, it's a complicated thought, but if you're an existing tenant, you don't actually catch up the way you would if new tenants came in. And so that's made the measurement of inflation stickier. But I'm happy to say we've been through that period now, and we are really seeing now housing services inflation pretty close to where it was when inflation was solidly at 2%.
Thank you. I yield back.
Gentleman yields back. Gentleman from California, Mr. Liccardo, is recognized for 5 minutes.
Thank you, Mr. Chair. Chairman, thank you for your testimony today. I appreciate that your dual mandate is full employment and price stability, and I appreciate your efforts on behalf of our country to achieve those. My understanding is that critical data is collected by the Bureau of Labor Statistics.
SGMT, Sagamit Biosciences, up again today. We're hitting
indicators that you rely on.
$9.50, up 13.5%. Sandy Gulf, Michael
CPI
Tango.
and other inflation indicators. We are certainly hearing a lot about the impacts of DOGE on our workforce, and specifically about the elimination of many of those positions in BLS. And now we have a proposal in front of Congress to cut $56 million from that agency. Are you concerned about the ability of your team to get accurate data?
I know ticker DNA, Delta,
ability
November
to
Alpha,
have
and
reliable
Hugging
indicators
Face.
to make
Hugging
good
Face is
decisions?
announcing a partnership
I wouldn't
with
say that I'm
Ginkgo
concerned
Bioworks
about
DNA.
the data today, although clearly there has been a very mild degradation of the scope of the surveys and things like that. But I would say the direction of travel is something I'm concerned about, and that is measuring the U.S. economy carefully and well is a project that's been going on, and we're getting better at it for 100 years and more. And it's really important, not just for the Fed, but for Congress and for businesses, frankly, to know what really is going on in the economy,
Hugging Face and Ginkgo to open up high-quality biological data sets for machine learning community.
I think it's a
And
smart
DNA
investment
seen
to
increased
just
activity
continually
on
try
that.
to get better at measurement of what's happening in the economy. And I don't like to see that, the kind of stories I'm reading, and the idea being that the data is going to become more volatile and less reliable. That's not going to, that'll make it more difficult for the private sector and for you and for us, and I don't like to see that direction.
I agree. Thank you. I appreciate that it's not your role to comment on the advisability of specific policies, but given your critical role in ensuring price stability and reducing inflation, I have had conversations with, quite recently, just a week ago, with a C-suite executive of a major world global retailer who informed me, because I asked, why aren't we seeing the impact of these tariffs and price data yet? And he said, it's coming in the third quarter, because it takes time for tariffs to work their way through a distribution chain. Often what you have on the shelf today may have been imported 2 or 3 months ago. Is that
DNA,
your
Ginkgo
understanding?
Bioworks getting a pop here. Delta
anticipate there
November
may be
Alpha up
impacts
about
down the road?
7%. DNA.
Yeah, that's very much what I hear. I happened to meet with an unusually large number of business people in this last FOMC cycle, and that's a typical thing that they'll say, especially the retailers, that what's being sold now was in inventory in February, let's say, and it just isn't showing up yet. So we do expect to show up, tariff inflation to show up more, but I want to be honest, we really don't know how much of that's going to be
IPO
passed through
is
the
open
consumer.
now.
We just don't know, and we won't know until we see it. It could be lower than we expect. It could be higher. We have to wait and see, which is kind of what we're doing.
I appreciate the uncertainty. Another thing
Halted
you told
on
me
a circuit breaker
had me very
on the
concerned was
way
that,
down
often
at 608
they will
at a high of
increase
725.
prices on goods not subjected to
Priced at
tariffs to
$5.
compensate for the very substantial losses they have to suffer with the increase of tariffs on relatively price elastic goods. So in other words, necessities will also tend to bear a higher price even if they're not subjected to tariffs. Is that your understanding of the potential impacts?
You know, that very much is something that companies will tell you that they do. If they can't cover the losses on the thing that's being tariffed, they'll find other ways to do it. We actually don't have prominent examples of that yet, but that's certainly a possibility. And that did happen in the last tariff episode with washing machines and dryers.
Thank you, Mr. Chairman. And finally, there's indications in the introduction of the report that the Fed is losing its ability, as we see interest rates getting closer and closer to the minimum threshold, the ability to stimulate this economy in times of recession. We haven't had a recession, or at least we haven't had an extended recession in a decade and a half. I am particularly concerned now as we are looking at debt that is being considered to be imposed on future generations by this particular bill. Could there be a combination of very high debt and very little room to move in monetary policy that could undermine our ability to respond to the next recession?
So we faced that issue quite a bit in the era of very low interest rates, but we're at higher levels of interest rates now, so there's significantly more room to cut than there was then.
Thank you.
Gentleman yields back. Gentleman from Wisconsin, Mr. Fitzgerald, you're recognized for 5 minutes.
Thank you, Chairman. Chairman Powell, thanks for being here today. Appreciate it. I want to go back to something we had some brief discussions about this in the past, but in September of 2024, with core inflation still being above target and the labor market was holding steady at the time, the Fed made a decision to cut rates by a full 0.5 percentage point. It kind of raised some serious questions as to whether or not the data truly supported such a move at that time, and I think some of us were surprised that it was a full.
Fed Chair
0.5%.
Powell says we are at higher levels of rates, significantly more room to cut than there was when rates were near zero.
Can you revisit that again? What the Fed was
Fed's
thinking
Hammock
at
says
the
we are
time?
not seeing a move to
Because it
abandon
seems
dollar
to be
by
somewhat of
investors,
an enigma now.
moving
It
to more
stands out as,
neutral weight.
Why was this done? Why was the 0.5% done at that point?
No need to be overly dramatic about our shift out of the dollar.
Actually, the inflation and employment readings were very
Iran,
similar then to what they are now. They weren't terrible.
Missile strike was
Right.
reaction
The
to
difference
U.S.
then was,
participation
you
in an
mentioned
Israeli
that
attack, not intended to
the labor
confront
market
Qatar.
was stable. It wasn't.
That
The
according
the
to
unemployment rate had actually gone up
Iranian
almost a
media.
full percentage point. I was very clear about this. We were very clear about it in real time too. The concern at that time was that there really hasn't been an experience, or hadn't been an experience in the modern era, in which the unemployment rate has gone up close to 1%. That hasn't been followed by much higher levels of unemployment and a recession. So we were looking at that and saying, and remember, at that point, at the point we're talking about, the federal funds rate was 5.3%, so definitely a very restrictive level. We were the last of the big central banks to cut. So we wanted to make a statement that we were supportive of the labor market and not just inflation. We've been focusing on inflation. I was quite clear about this. So that it was all about the labor market. Inflation was the same and unemployment was roughly the same, but it was the rate of change with the unemployment rate that raised a lot of concerns. And remember, we were being criticized for being late to cut. So we could have done 25. If we'd done 25 in July, we were criticized for not cutting in July. Instead, we cut 50 in September. And it seemed like the right thing to do. You know, and at the end of the day, we do what we think is the right thing when we think it's the right thing to do. We don't take into consideration political factors. If we start doing that, I don't know where that stops. Once you start considering elections and stuff like that, where does it stop? You know, so
no, and I didn't want to insinuate that it had anything to do with the election itself, but there just seems to be some very similar numbers right now, and I'm wondering. And I don't bring this up because I want to kind of make a point about did the Fed do the right thing or not. I bring it up because it seems like everything's in place right now to kind of do the same thing, make the same move. I know this morning already you've talked a little bit about where you were on inflation right now and kind of what you're watching, but is there any lesson there? I mean, are we in a position where it would be appropriate to do something as big as a 0.5% cut again?
Well, as I said earlier, if you just look at the basic data and don't look at the forecast, you would say that we would have continued cutting. The difference, of course, is at this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs. Now, and we can't just ignore that. But we're not. We're just saying let's wait and see more. That's all we're doing. And if you will have noticed, a substantial majority of the committee has written down rate cuts in the remaining 4 years, four meetings this year. So it's just a question of being prudent and careful. But at a time when the labor market is still strong, we don't see weakness in the labor market. If we did, that would change things. We're going to continue to adapt as the data adapt. But that is the difference between then and now. Then inflation was forecasted to continue to come down. Here it's forecasted to go up by all forecasters. So, and again, we're not overreacting to that. We're just saying, hey, as long as the economy's strong, we can take a little bit of a pause here. And that's what we're doing. And again, continue to adapt as the data comes in. If we see data that suggests that inflation's not going to produce big increases, that would matter. And if we saw the labor market weakening, that would matter too. But we don't see those things.
What about supply chain? In 2020, that was a big issue, obviously related to COVID. But I know myself and other members, when we're in our districts and we're specifically talking to light manufacturing, there's concerns about the supply chain. Is that part of the data package that you review when you make a decision about where we're headed in the future?
Very much so. I think that's one of the great, I won't call it a great thing, but one of the lessons to be taken from the last episode is supply chains really matter. We're watching that carefully. It's too soon to say really on that. We're not seeing it yet, but we could.
Gentleman's time has expired.
Thank you, Chairman. Yield back.
Thank you, Mr. Fitzgerald. The gentleman from New Jersey, Mr. Gottheimer, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, as a member of the Intelligence Committee, I'm deeply concerned about the threat of Iranian cyber attacks on our financial system as retaliation for our strikes on their nuclear facilities. In its cybersecurity report last year, the Fed acknowledged that critical infrastructure, including financial services, is at risk with rising geopolitical tensions. Iran has a history of targeting American infrastructure companies and financial institutions and banks, which could obviously threaten and cause economic damage. What actions is the Fed taking now to monitor and defend against Iranian or proxy cyber threats targeting our country's financial institutions?
So we're in touch with the other regulators and the parts of the government that work on cyber, as you know, and we're in touch with the banks to say, for people to be on the alert for things like that to happen, and also we're on the alert because we're a target as well. So you're right to raise it. It's a big issue, and
do you feel like you have the resources right now to be prepared for that?
Yes, I mean I think we do. We spend a lot, and the government generally spends a lot on these things, and but you can never ever be comfortable in this area because the bad guys are always getting better, so we need to get better.
Thank you, Chairman. Switching gears, the president and members of his administration have recently called you out, various name calling for certain decisions you've made. I know that some people worry that the president's bullying will impact your decision making. I know you work together, and I know that and respect, obviously, your independence greatly. Anything you want to add and give you a chance to reiterate your independence to the American people?
Powell said in touch with other regulators, banks, other
focused on one thing,
parts of government to be
and
in
that is we wanna
high,
deliver
to be
a
on
good
alert for
economy
possible
the
cyber
benefit of the
attacks.
American people. That's it. And anything else is kind of a distraction. I don't mean to refer to any particular thing, but we stay focused on that task all the time. We always do what we think is the right thing to do. And, we live with the consequences. And I don't know how else to do the job.
Right, so the name calling and the Mr. Too Late and all that stuff, the American people shouldn't worry about that. You're focused on being independent.
That's what I care about. I care about doing the job for the American people. The things we do matter a lot for people's lives, and that really concentrates the mind. You want to just stay focused on that task. As long as you're sitting in these chairs that we occupy, focus on that task, do what you think is the right thing, and take the consequences.
Thank you, Mr. Chairman. You've previously stated that you view stablecoins as a form of money. Payment stablecoins are already being used for both retail and wholesale payments, as well as for settlement. Recently, this committee passed the Stablecoin Act and the Senate passed the Genius Act, both aiming to establish clear regulatory frameworks for fully reserved dollar-backed payment stablecoins. Given their design to maintain a stable value and be redeemable for U.S. dollars, should the SEC or other regulators explore treating these stablecoins as cash equivalents for accounting or financial reporting purposes?
So let me say, I think it's a great thing that bills are moving. We need a stablecoin framework on that particular issue. I don't have a view for you. I can come back to you on that.
I'd be grateful. Thank you. High rates have also caused, as we've discussed, the cost of paying off our nation's debt to skyrocket. The CBO estimates that interest payments will cost the U.S. $1 trillion in fiscal year 2026 and continue to rise to almost $1.8 trillion by FY 2035. How do you see us continuing to be able to afford to pay off our debt at this rate? And as the U.S. continues to borrow, how does that impact your decision to keep or cut rates? Obviously, foreign countries like Japan.
HCHL shares
COS stands Charlie Oscar Sandy Michael President National Health is entering U.S. market with strategic made in American manufacturing mitigating tariff risks. Executes agreement with New Jersey-based Adulcas Biotech shares are seeing increased activity.
It's not something we
COSM.
take into consideration in making monetary
And COSM
people's jobs.
enters U.S. market with strategic made in America
COSM,
manufacturing,
Cosmos Health
mitigating
enters
tariff
U.S.
risks.
market with strategic made in American manufacturing to start U.S. production at GMP certified facilities. Charlie Oscar Sandy Michael.
Last question. Last week, you chose to keep rates steady, and families in our state, as you'll hear from a lot of people today, are really struggling with the higher cost of borrowing and putting off bigger purchases on things like cars and homes. As a result, their wallets being crushed by these price hikes and obviously the president's tariffs. What do you have to say to Jersey families who are struggling with higher costs and how you look at how they should forecast themselves for their own families?
We're committed to returning inflation sustainably to 2% and keeping it there in the long run. And what we're doing now is we had cut rates by 100 basis points, so they've come down quite a bit. And when the time is right, I expect that will continue, and that will depend on economic factors, in the coming months.
Powell says when the time is right, expect rate cuts to
Thank
continue.
Gentleman yields back. Gentleman from Nebraska, the chair of our Housing and Insurance Subcommittee, Mr. Flood, you're recognized 4 or 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, later this week, the banking agencies will be proposing changes to the supplementary leverage ratio, which we think are long overdue, considering the Fed in 2021 indicated that they would soon put out proposals for reform to the SLR and never actually did. However, our understanding is that the proposal being considered this week will not allow for treasuries to be excluded from the SLR calculation. Secretary Bessent earlier this year had argued that such a change could serve as a boost for banks and their ability to intermediate in the treasury market and could potentially pull treasury yields down 30 to 70 basis points. Chairman Powell, do you agree with the Treasury Secretary's comments on the potential positive impact of SLR reform on the treasury market, and what is the rationale for not excluding treasuries from the SLR calculation in the proposed rule?
So I agree that when the leverage ratio is binding, it discourages banks from undertaking low-margin, fairly safe activities such as mediation in the Treasury markets. So this should encourage more mediation. I don't have a numerical estimate of how much that would matter, but I do think it would matter. I think it was important. I've supported leverage ratio reform for a very long time, since before 2021. In terms of the structure of the thing, I think we're seeking comment on a particular proposal that doesn't involve exclusion, but we're also asking a question about exclusion.
Mr. Chairman, considering the Fed temporarily excluded treasuries from the SLR calculation during the COVID pandemic, were you aware of any safety and soundness or financial stability problems that arose as a result of that decision? And if not, why was that relief terminated in 2021?
On CSCO, quantum networking startup Connect adds Cisco as investor in new fundraising round.
My long-held view is that we should have a permanent measure, and now we're going to. And we have an open board meeting on Wednesday afternoon, and after I finish my hearing on the Senate side, and I'm very much looking forward to putting this proposal out for comment.
Thank you. In March, the Federal Reserve, together with the FDIC and the OCC, announced that they intend to issue a notice of proposed rulemaking to repeal the 2023 Community Reinvestment Act and replace it with the legacy CRA framework. Nearly 3 months have passed since this announcement. What is the status of this project?
Well, we're going to do what we said we were going to do. It's just a question of execution, and I think you'll see that coming. This would be so Vice Chair Bowman has the job of sequencing these things, and that one's certainly coming.
Do you intend to issue
the hell did coin do?
Clean rescission and replacement of that rulemaking, or are you considering amendments to the legacy rule?
I honestly don't know. We'll come back to you on that.
Sure.
So we should know more later this week.
We might, yeah.
Okay. Finally, I'd like to build off of what Congressman Stile asked previously on the Supervision of Novel Activities program. Do you feel any changes?
Financial Times reporting EU reading with retaliatory tariffs to secure a better trade deal with Trump.
I do, and I also think Governor Bowman, now Vice Chair Bowman, is someone who is actually deeply knowledgeable and experienced in supervision, and that hasn't really been the model. We've more had people who are experts on regulation. I think she brings a particular ability to move supervision in a healthy direction while also preserving safety and soundness. And that's what you mentioned is one of the dimensions in which I think that will be true.
Thank you for your testimony today. I appreciate your service to the country. And with that, I yield back, Mr. Chairman.
Thank you.
Gentleman yields back. The chair recognizes the ranking member of our full committee, Mrs. Waters.
Oh, boy.
Coming from Financial Times, says EU
Retaliatory. Oh, here we go again.
Tariffs to secure better trade
Starting
deal
up
with
some
Trump.
tariffs.
I appreciate that
Oh, shit.
the repeated attacks by the president and his cabinet on you personally, that you stood your ground and you did not bow to pressure from Trump, especially given the current state of economic uncertainty due to his policies. Last week, the Fed held interest rates steady.
Anything juicy out of this
You said
yet?
that you and other experts continue
Or is it just basically
meaningful
everything in
amount
line?
of inflation due to tariffs, Trump's tariffs. You said that it may take some time for the tariffs to work their way through the supply chain.
DM for
but that you
juice.
found, and I quote, many companies do expect to put some
Is that a spotting scope?
of tariffs through to the next person in the chain and ultimately to the consumer, quote, end quote. So while the president may try to claim other countries pay these tariffs,
That's got to be super expensive. How much is that? I don't know anything about speakers, so I can't tell you how good those are.
in the United States that will bear these costs.
So it can be anybody from the exporter, the importer, the retailer, the manufacturer, or the consumer that winds up paying these tariffs. In the beginning, it will be the importer that pays the tariff, but ultimately it will be spread out among those five, each of which will try very hard not to contribute, but in the end, the tariff will be paid. And
Jeez. So you
all
turn
of the data
15 bucks into
suggests that at least
300.
some of them,
Hot damn, that's a
not
good
all
day
of it, but at least some
at
of
the
them
old
will
Goodwill.
LGVN, Longebron,
Well,
Zach
you
Small Cap
indicated it may
Research
take
with
some
a
time
$9.55
way
price
through
valuation.
the supply chain.
Says enrollment complete
Circle
for pivotal
with the
trial.
juice here.
In McGough picked in November.
When is it that we can see
There's your
negative
view at
impacts
break.
to
I don't know where this volume's
inflation
coming from.
Trump's tariff policy?
So You know, the things that are being sold at retail now, they might have been put into inventory before the tariffs in February or March. So we think we should start to see this over the summer, you know, in the June numbers and in the July numbers. And if we don't, I think we're learning here. If we see less pass-through, there aren't historical experiences we can consult here, really. So it may turn out that the pass-through is less or more than we think. And I think we're going to be learning. You know, we'll get a number for June. You know, an inflation number for June. We'll learn something then. We'll get it for July as we go through the summer. We should start seeing this. And if we don't, I think we're perfectly open to the idea that the pass-through will be.
Powell on tariffs says, think we'll start to see more tariff inflation starting in June.
Great.
My constituents about these tariffs, and the question that comes up is now: is this going to only hurt maybe the big businesses? What about our small business people? What about the people that we buy goods and services from every day in our communities? Is this going to hurt big business as well as small business?
Yes, I mean, I don't think it's. I think it will certainly. If you're a smaller company that maybe imports a single product.
LGVN Longeveron shares moving to the highs of $1.32, up about 15%. Lima Golf picked in November.
Affected significantly, whereas bigger companies have more resources and a more diverse product line.
Why do you think you can resist the president basically telling you what to do? What gives you that authority?
I don't think about
What kind of question is that?
I think I have a job that I'm sworn to do, and all I think of is how much people rely on us to get it right. You know, it really matters that we get it right, and that concentrates one's mind, and so that's what we think about at the Fed. We think about
Glasses are off.
You know, I have all I want to do in what's left of my time at the Fed is have the economy be strong and have inflation be under control, have a solid labor market. I want to turn it over to my successor in that condition. Of course, that's what keeps me up at night, is to do that, and that's what I think about. That's the only thing I think about.
So how are you protected? By law, by constitution? Where does your authority come from?
I think, I've covered all that. I do think we're fully protected, and again, I don't think about that anymore. What I think about is let's just do our jobs, and that's what we do. You know, we don't talk about those issues at all, and all we do is do our jobs as best we can. And you know, it's not an easy job, but it's one we've willingly taken on, and very important that we remain focused just on the job and not on other things.
Thank you very much. I yield back.
The gentlewoman yields back. The chair recognizes the gentleman from New York, our vice chair for communications, Mr. Lawler. You're recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, as recently as yesterday, Fed Governor Bowman indicated that if inflation pressures remain contained, the Fed should consider lowering rates. And said she is open to a rate cut in July. Governor Waller said very much the same. Do you believe that we are in a position where we may be able to cut rates in July?
Oh boy.
I would say this. I think if it turns out that inflation pressures do remain contained, then we will get to a place where we cut rates sooner rather than later. But I wouldn't want to point to a particular meeting. I don't think we need to be in any rush because the economy is still strong. The labor market is strong. If we were to see the labor market, meaningfully weaken in a way that was concerning, that would matter for that decision. But if we see inflation, continuing not to move up, we hadn't expected inflation to move up much. We do expect it to move in the summer, and if we see it not happening, we'll learn from that.
The September 2018 Teal book suggested that the Fed, seeing through tariffs' inflationary effects, is an appropriate response so long as inflation
Uber coming back to high a day.
Anchored and that the
5-minute play there.
costs are relatively short-lived. Would you agree that this assessment from the Teal book still applies to today?
I would. Those are the exact.
Trying to get $100 out of this. Come on.
About this situation.
Don't just stop.
Plus the size of the
okay,
tariffs.
stop.
So let's
immediately.
Let's
as soon as
assess
I
the
get
current
it.
economic situation. The monetary
I said,
policy report states
make
that
100, not
longer
lose
run
100.
Inflation expectations, quote, continue to be broadly consistent with 2% inflation, unquote. And a Harvard study argued that
Okay.
despite
Right into a
relatively
cuck.
quick price responses to tariff announcements, the overall magnitude of these changes
Oh, it didn't
remains
cut. Did it cut?
modest.
No.
So if these conditions hold, is it
EYN
not
is an
unreasonable to
absolute
think
monster.
that underlying inflation trends should continue its path towards 2%?
That's certainly a very defensible position. I think what what people, others on the committee think, and what I think is that this is a question we need to be careful with because it's different than it was in 2018. The difference is that we haven't had 2% inflation. In 2018, we hadn't had an inflation as high as 2% for a decade anymore.
Right.
This is a different situation. We haven't fully restored price stability, and another shock. We have to be careful if there's a meaningful, large, and sustained inflation shock. We have to be careful about that. And so, I think we're just trying to be careful and cautious. And if that happens, we need to be there for it. And so, we're in a difficult situation in deciding exactly when.
Feels like it.
But again, if we
Top
continue
tick
to see
Tommy
inflation
back in the hizzle.
and not prove up at the high levels higher levels than we expect, then that would matter for our decision making.
Chairman Powell, economist John Taylor once noted that the Federal
Oh, you
Reserve
piece of
should
shit.
deviate from its own Taylor rule in the event of an oil shock, similar to the tariff scenario. A one-time price increase
How?
from an oil shock should not be accompanied with an increase in interest rates. Do you agree with that assessment?
I generally do, yes.
Previously, you said that if
Oh,
you
that's
wait
horrible.
for inflation to get back down to 2%
That's
to cut
horrible.
rates,
It's a horrible
you
candle.
are already too late. You also said in November 2024 that inflation was on a sustainable path to 2%. Given that the FOMC believes that interest rates now are moderately restrictive and that an oil or tariff shock may not impact underlying inflation in a significant or meaningful way, because as the Monetary Policy Report established, inflation expectations are firmly anchored, what is the reason not to cut rates?
Well, it's uncertainty about the size and
Got lucky there, boys.
persistence of the
Got
potential,
lucky there.
but highly uncertain inflation from tariffs.
Comments up by Fed's Hammock says, I'm towards the
Taylor
top
rules in the Monetary Policy Report. 4 of them
top
say
end of
that
the Fed
policy rate
dot
is in
plot.
the right range, and the other one calls for a hike.
Right.
Just for the record.
Well, back in the beginning of the Biden administration, okay, when we talk about inflation, they increased federal spending by $2.5 trillion each year. $5 trillion in new spending. That's what gave us inflation. By
Comments up by
printing
Iran's
money and
Atomic
borrowing,
Energy
yet
Agency.
You did not respond to that by raising rates. In
See,
fact, you were late.
says
to
Iran's
raise rates.
nuclear program
And
will
now, again,
resume
we
without
see a
interruption.
situation where
We are
you
ready
are
to
late
restart
to cut
enrichment.
rates.
Our program
That
will
is the challenge
not
here.
stop.
Gentleman yields back. Chair recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you, Chairman. Chairman Powell,
You got to think that's
She's
just
the best
okay.
of
Go
your
ahead,
knowledge.
restart it,
has President
and like hit the
Trump
reset button on a decade. You got to think it's a lot of
coherent
posturing,
Well,
save
Powell
face at
asked,
this
Why
point.
not cut rates? Says it's uncertainty
Is
about
that
size,
your
potential
opinion?
persistence of inflation
That is
from
not
tariffs.
a judgment for me to make or to discuss.
Well, what do you think?
Sir, it would be
You- I
inappropriate
mean,
for me.
you're
I don't
running
comment
our
on the
economy.
president's words or the president's
Does
policies.
the president, in your opinion, does he have a coherent tariff policy? You ought to have an opinion on that. You run our economy. This is your bailiwick. Do you
Your
think
what?
he's got a
Bally
good
what?
policy?
That's a term I've never heard
Answer.
before.
I would never comment on the president of the United States in that way.
All right. Do you think?
Valleyway? Is that what he said?
What do you think our policy should
Someone clip it and play it back.
We play no role in either establishing or commenting on tariff policy or fiscal policy, for that matter.
Let
Not
me
our
tell you-
business. We have a specific mandate. We try to stick to it.
Let me tell you something, Chairman. In my state of Georgia,
Let me tell you something.
fastest growing
It's that clip.
trade
I love that clip.
down there. The Port
What's
of
that from?
Savannah
Is that from a video
is
game?
Indeed, our nation's fastest growing party, and it seemed
Ballywag.
it's
It's not a standard
rising
English
even
word.
more. The cost, the expenses. Our business community is suffering.
Fire Marshal Bill.
And
Is that what it's from?
What you think of our tariff?
No. You're thinking of. Let me tell you something. I'm thinking of the Indian voice guy that says,
What do we
"Let me
tell
tell you something. Let me tell you something."
And you're a good man. I want to know the answer
Ballywick,
to this
Aaron
question.
Richards.
I want to know how you feel. This whole tariff question.
See above. What do you got, dude?
It's a
Oh,
tax
clip.
It's
let me tell you something.
Oh yeah. It's a. That's it. That's right. He's bungee jumping, but it's used in all sorts of like video game meme videos. Here you go. You gotta see it. You gotta see it. Why isn't the? No. Why did it mute?
Let me tell you something. Let me tell you something. All right. Let me tell you something. Let me tell you something. Wait. Hold on. Sorry. Wait. No. Wait. What did you want to tell me? Both of you guys. What did you want to tell me? Double check. Safety first. Double check. Let me tell you something. All right. Let me tell you something. Wait. Hold on. Sorry.
Love it. Let me tell you something. All right, back to this.
Honestly,
Uber went for it
this is
there.
Not our role. We are not a
That would be me,
institution
100%.
that comments on or analyzes
Some dude pushing me over the edge, and all I'm holding on to is a freaking plastic chair. Yeah, I'm screaming my face off too.
We don't. That's just completely out of our lane. It's really inappropriate for me to have any comment on that. I'm sorry to say, Mr. Scott.
We're having these regional disruptions. Our economy is in a bad way. And I want to see you and the president. You got to get together on this. We got pecans.
WFF coming back up.
We got peanuts. We run the biggest group. We got the fastest growing trade mechanism in the Savannah Port Authority.
Powell said if it turns
We're
out inflation
crushed
pressures
in
are contained, we'll get to a place when we cut rates. We don't need to be in any rush. Won't point to a particular month. Expect inflation to move in the summer. If not happening, we'll learn from that. It's different from 2018 when inflation was lower. Today we have to be careful of a meaningful inflation shock. Difficult to decide when to move. From Fed Chair Powell, Fed's Hammock says, I am towards the top end of the Fed dot plot. Housing market is the one sector where
19.
year of labor shortages due to migration policy and other factors.
Appreciate the gentleman from Georgia. Gentlewoman
That's from the
Florida.
Cleveland Fed President
Salazar
Hammock.
is recognized
Hot
for
damn.
5 minutes.
Summer in the city.
Thank you very much for being here. Appreciate your time. And my name is Maria Salazar. I represent the city of Miami, which is
Go on, go high there,
the
bitch.
city's most composed of Hispanic Americans and people that adore living the American dream. So putting that into context, I wanted to ask you a few questions about the labor force. We agree with what the President Trump is doing, or what the administration is doing in deporting illegals, criminal illegals. We do not want Agua. We don't really want people who have committed any type of crime, even more if they are illegal.
Oh, son, bitch.
But we do
Who's this
know,
asshole?
unfortunately, what's happening
And damn did it. Oh, he's gone, and he's back. And he's gone, and he's back. How about you not put 8,000 shares there? Like freaking trickle it in there, bud. Jeez.
Collateral damage. And most of those people are working in three main sectors: construction, hospitality, and agriculture.
So stupid. People don't know how to exit.
He understands that those hands are needed. We're talking about 15% of the economy: construction, hospitality, and agricultural. So my question to you is:
Explosions heard in Syrian capital.
What is the growth effect on the economy if this type of removal of people, of hands being removed from those three main top sectors?
Well, that's nothing.
So immigration is another area where nobody put us in charge. We're not, Congressional Budget Office and other agencies can make assessments like that. We do have a role to maximize employment, but we take immigration policy we take it as it comes. What it's obviously done is it's
94.
Really reduced the amount of growth in the labor force.
Selling the ass button would be awesome right now.
Demand for workers has been coming down as well because they've been coming down at about the
one
same.
drop at a time. Reduce the growth. Why don't we talk a little bit more? Because we want to continue growing. We're the number one economy in the world. We need to continue growing. So you're saying that what's affecting the growth?
Well, there are two things that affect growth. One is growth in the labor force, more people
monster.
Working. The other thing is productivity. How much do they produce per hour worked? And when you significantly slow the growth of the labor force, you will slow the growth of the economy. But I think again, it's not for us to have a view on immigration policy.
I understand. I was just my
EYE I Novia, highs now up more than 80% at the high $10.
Watch coin, 5 minute, lots of price compression up here.
That's one of the reasons.
I don't like the wicks on the 5
So now let's talk about
to the top side.
2025 to 2035. Americans are not having enough kids. So that means that we need other people, right? So over the next decade, based on the current trends,
You hear that, boys?
to you and that you just reiterated,
We got to populate the U.S. Let's get to work.
to fulfill the labor needs.
Salt Life, you got a head start. Congratulations.
Between 2025 and 2035.
So I think labor economists do observe the
Seed
phenomenon
management.
you're talking about, which is demand for labor going to be met by the domestic population?
Catering here.
Foreign population?
Wow, what would she
The
say?
answer appears to be
She's done her job.
And then what about if we do
Or
not
her part, I should say.
that
Her
labor
job.
force over the next
She's got kids.
What happens?
So many things will happen. You can see a big increase in
I
productivity.
know, I'm waiting for the
Need as
EYEB
many
to,
workers.
or EN to
example,
chill for a
artificial
second.
Intelligence could be implemented in a way that creates widespread productivity gains. I wouldn't count on that, but it's a possibility.
not.
3 too many. Now you're going to have to pump those numbers up.
No, I mean, I think there'll be gains because with productivity enhancing things,
Scared me, Luke.
take longer to be
I don't know what was coming at me.
and then it takes a while for the gains.
Felt like
to
I was in
come.
Tel
I think
Aviv.
In the case of artificial intelligence, those gains are coming, but they may take longer or be less in the beginning than expected.
Maybe more. How many got Buzz?
Changes happen, then what happens? Our economy doesn't grow. Is that what you're saying?
Yes, but I mean, those who make immigration policy are entitled to weigh these factors.
I
We can
hear you.
report on what happens, but it's really not our job.
I understand it's not. I just want to hear what you're thinking, what's your expertise based on those immigration laws that we're implementing. Right
3.
now.
You
The last
ready
thing is
for
that
the?
we have
n-
30 seconds.
You ready for the name of my last?
Everything that we
Wait,
have
like
talked about, do you think that we can continue
the name of your last child that's born, or like your next one, number 4, that may or may not become
in the world and that we could
a reality? 3-week-old. Okay, what's the?
immigration laws that we have right now?
I don't remember you having a 3-week-old.
Earnings, but if you're
But I do think I remember a long time ago you telling us y'all. Anyway, just give it to us. What's the name?
Gentleman's time has expired.
Good question.
EYEN Juice.
Gentlewoman's time has expired.
All right.
Let me turn
Thank
to
you,
the
Chairman.
ranking member of the House.
Ellie
Intelligence Committee,
Audrey.
Himes, for 5 minutes.
Thank you, Mr. Chairman.
Last name?
And welcome, Chairman Powell. Let me start.
I'm confused.
By thanking you for your careful keeping in your lanes.
You
during
gave your child the last name that's not
in
yours?
particular for your stalwart defense.
I'm so freaking confused. All right, press compression here.
Pressure from very
All right,
powerful
try
places,
this.
Lots of kibitzing from lots of members. On
Spreads
the,
went 15 cent. Can't give that
interest rate
because it's too
question,
unique.
most
I'm so
notably,
confused, Buzz Meta, of what you're trying to tell us.
very bedrock of our economy. So thank you for that. Mr. Chairman, I want to talk.
Oh,
just a
so
little
you're
bit
saying
about-
Ellie Audrey and then your last name. So first name is Ellie, middle name is Audrey. Okay. Could you have said that more
swinging wildly with
confusing?
West Texas Intermediate in the last month or so being anywhere.
Obviously, we know that your last name goes at the end. Holy
We
jeez,
recently saw
Buzz.
the Iranian parliament vote to close the Strait of Hormuz, which currently handles around 20 million barrels a day, a fifth of global demand, and a little bit more in terms of natural gas.
Who writes it like that?
Chair Powell, you said last week that conflict
That's
in
a
the Middle East
cock,
in
boys.
the
This ain't.
1970s
I'm gonna
resulted
get
in
out.
very
I
large
don't like it.
inflation shocks.
It's a
In contrast to
$300
the
laser.
1970s,
Jeez.
today the United States does not import most of its energy.
Here goes coin.
We call ourselves energy self-sufficient on a net basis.
780.
But I hear the argument made that I think is wrong, that because we're energy self-sufficient, somehow we are insulated from global energy market prices. Can you comment on that? Is there any validity to the notion that we are not, American consumers of energy are not subject to global swings in energy prices?
Yeah, so the price of oil is set globally, right? And I think if you go back a few years, the thought was that when we had a natural shock absorber, which is that we would just drill more. And that we would, if prices went up, we would drill more, and so you wouldn't have these sustained price shocks that we had during the 1970s and the original OPEC era. I think that is actually in question now because the oil industry in the U.S. is being much more careful and focused on return on investment than they were, having been burned with overcapacity.
Right, and I mean, yeah, in the long run, you can invest in additional extraction technologies, but this does not respond to day-to-day spot prices. So
not quickly.
The point I'm trying to make is that the conflict in the Middle East, if it resulted in $120
Uber
a barrel
with the just
oil,
straight
which is where oil
juice.
was in 2022, that would have a fairly substantial inflationary impact on the American household. Is that correct?
We would certainly feel that, and as we've discussed earlier, there's a lot of lore around looking through oil price shocks, but that depends on the facts and circumstances.
What, as a technical matter, we tend to refer to CPI, which is a basket of goods, and we measure the price changes. Roughly speaking, what percentage of that basket is comprised of energy?
WFF. Unbelievable. Now it goes.
And oil consumption is much less than it was in the 70s.
Watch over yesterday's high.
But energy includes natural gas and gasoline.
Why did this thing?
It's a meaningful portion of the.
Yes, although of course we have more natural gas than we have so
12.
much natural gas, so
that'll
always be there for us.
So none of us can predict what's going to happen in the Middle East in an hour, much less in a week or a month or a year. But as a technical matter, at what price for a barrel of oil does the American household begin to feel inflationary effects? So we're at $75 a barrel roughly right now. At what price point does the American household begin to feel some inflationary effects?
I don't want to throw out a number. I think we're frankly, it's too early to say that something like that's going to happen, and I know you know that, but I wouldn't want to throw out a specific number. If prices went up materially, people would feel that.
Okay. Again, I think if I look at the data here, WTI per barrel about 120. It peaked at about $120 in 2022.
It was a cuck and go. Where's the go part?
Suggest would occur to inflation, and how would it influence?
AMBA.
Should we be back at $120 a barrel?
Well, let's just say there's a big price spike in that range. So, we would look at that, and we would ask ourselves, we look at the overall situation, we would ask ourselves, should we react to that? So, for example, during what we called the Arab Spring back in the early teens, oil prices went up a lot, and that went into the price, and there was a discussion, and I think the right answer was to look through that. The question you'd be asking to yourself, because by the
on AMBA, Amberl is set to explore potential sale.
The question today would be,
potential
is the situation different, and what would be the implications of those differences?
Gentleman's time has expired. I thank the gentleman from Connecticut. Chair recognizes the gentleman from North Carolina. Mr. Moore, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, I want to touch on international standard-setting bodies like the Basel Committee on Banking Supervision.
Still going.
Our goal is to promote better harmonization for global capital flows.
AMBA trading at day highs now.
But the Biden administration's implementation of Basel III endgame demonstrated the pitfalls when the U.S. is a follower instead of a leader in the international arena. That's why both Democrats and Republicans shot down former Vice Chair Michael Barr's proposal, which made capital less acceptable and put U.S. firms and businesses at a global disadvantage. Do you agree that the United States should only implement international standards in a way that is consistent with our own domestic legal and regulatory scheme?
I do.
I appreciate the Federal Reserve's announcement yesterday to end the use of reputational risk during banking examinations. This supervisory practice was used as a tool to pressure banks to refrain from offering financial services to politically disfavored individuals or industries. What further steps is the Federal Reserve taking to help usher in these changes, such as ending examination practices that informally encourage banks to close certain accounts without written justification?
So we're developing, I should say Vice Chair Bowman is developing a range of policies that will help in that area, and I should let her speak to it. But as you know, we've eliminated reputation risk largely.
On that WFF, we are currently on a circuit breaker halt. Keep in mind,
problem over the course of last year, and like the other
morning headlines on the name prior to the open, announcing plans for major investment in China, WFF.
That's a decision for them in the private sector.
Let me ask you this, how are you ensuring, though, that like the frontline examiners are
All
aligned
right.
with this new direction?
What do we have quoting on this WFF 3127?
That is the ultimate question.
Bloomberg is recently reporting
AMBA
is exploring a
as
sale.
a former bank examiner, Vice Chair Bowman is actually very well positioned to engage with supervisors and in a way that someone with experience can do successfully. Whereas if you don't have that experience, I think it might be harder.
Thank you. Secretary Bessent recently announced a drive to change the culture of supervision through improvements to examination procedures, enhanced monitoring of examiners' compliance with those procedures, and more realistic processes for appealing supervisory findings. That includes defining unsafe and unsound by rules rooted in financial risk. Do you support this initiative, and will we be seeing further rule changes at the Federal Reserve to
30 seconds here.
So I like the sound of all that. I will say, on issues of supervision, Vice Chair Bowman has significant authority, and also she's got the background and the understanding. And the first thing I would do is I would ask her what she thinks about that.
Okay. Just sort of a changing direction on a couple of questions. During the volatility in the Treasury markets last April, some have speculated that foreign investors were dumping Treasury securities. Since then, though, recent data has showed that foreign investors' holding of U.S. Treasuries held close to a record high in April. Does this data show that Treasury's safe haven status and the dollar's global
10-minute halt.
status remains strong while the administration
Did it gap up at the last second?
Negotiations?
I would say yes to that. I think we need to be careful about these narratives that pop up quickly. I mean, we're
1244.
currency
Damn
and
it.
the world's greatest democracy, and I think the dollar and is always going to be, for a long time, is going to be the reserve currency and the place where people want to be.
Let me ask you this. Do you believe there's a possibility that Treasury will crack, just as Jamie Dimon has recently warned at the Reagan National Economic Forum?
I don't want to say things like that. I don't think that's something that's happening. Treasury markets are functioning well and normally, and they did function through a period of pretty substantial stress. And as you pointed out, Mr. Moore, that they're focusing well now.
Thank you. With that, I yield back. And actually, if Ms. Salazar is still here, I'll give her my remaining time. If not, I yield back, Mr. Chair.
Gentleman yields back. Chair recognizes Ms. Williams of Georgia. You're recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being here. It's been a while since I've had the opportunity to ask questions sitting at the bottom of the room, but I am happy to have this conversation today because the last time we talked, last July, I mentioned that combating economic inequality is a critical part of the Fed's dual mandate, and that is something that I am deeply, deeply interested in. Back then, we were talking about how we can get everyone in our economy to have the opportunity to contribute to their
commentary out by Bill Gross.
That's how we get our economy firing on all
Discussing the
cylinders
10-year
and work to continue
bond
to
yield.
close the racial
Also
gap
says,
between
I
our
suggest
home city
a
of
little bull
Atlanta
market for
continues
stocks
to
and a
lead
little
the
bear
nation
market
in.
for bonds.
That seems like such
Nothing
a far cry
dramatic
from
either
where we
way
are
for
today,
now.
almost a year later. Forget our economy firing on all cylinders. Now our economy and our nation seem to just be on fire. We're looking at tariffs that are raising the prices of groceries, fuel, housing,
I don't know why.
everyday goods. Chairman Powell, I get feedback every time I'm in a hearing about my nails because I like to get my nails done. And my nail tech told me about the
AMBA,
increasing cost of so
Amberella
many
popping
of
here,
the
Alpha
different
Michael
products
Bravo Alpha,
that would be
AMBA.
used just for me to get
J Powell's
my
like, what the
manicure
hell are we
monthly.
talking about
Shares
here?
up about
Tariffs are frightening
19%.
so many of our small businesses, which we know are the backbone of our economy, and so it's hurting my community in Atlanta. But it doesn't seem like our president and my
2.5
Republican
minutes.
colleagues are really interested in making sure that our economy fires on all economies, is on all cylinders, as long as billionaires continue to get richer, because that's what we've seen and all of the funding that has been done to the federal government. And Chairman Powell,
Chatter that the
I'm
company is
sure
exploring a
that this
sale,
is coming
AMBA.
to your department as well. With the recent events that we've seen, we know that it is very dangerous to gut the federal government, agencies that we depend on, and politicizing the work of agencies such as yours.
BOYG.
Chairman Powell, this current president has tried to reclassify tens of thousands of non-political public servants just to make it easier to fire them. And that includes people who have served in Democratic and Republican administrations. It even includes people who serve in independent agencies just like yours. Chair Powell, as a chair who our current and previous president routinely has threatened to fire, I think I just heard something on CNN today while you were here testifying. But what effect has this policy had on the career civil servants in your agency? And are these threats making it easier or harder for the Fed to do monetary policy?
Easier, harder.
Particular AMBA, Alpha, Michael,
having
Bravo,
no effect.
Alpha,
We're doing our jobs.
continued heavy activity.
You're doing your jobs. I appreciate
gets
you doing your
reporting
job,
companies
even
pointing
when
He needs to say, I am a professional.
it is important to tune
I can
out
relate to
things
J
that you
Powell.
hear on the media, because
Getting
I hear
constantly
it every
harassed by
day
your chat. I
representing
mean,
a district that has a
feel
lot
for
of
him.
federal employees, a lot of people who work at your agency. I hear from people all the time. Thank you so much. And not only do I have thousands of federal employees in my district, but my district has one of the widest racial wealth gaps in the country. Much of that has to do with our worsening housing crisis. And unfortunately, as we've seen with the past 6 months, this administration has been focused on this big
All
billionaire
right, maybe
bailout
20
bill,
seconds here.
cutting HUD, and releasing a budget
What are we
that
quoting?
does not help the supply of
12:55
fair and affordable
maybe?
housing nationwide. Now we've heard the president talk about
10
having
seconds.
the power to control interest rates. In your opinion, Chairman Powell,
72,
what would you expect
jeez.
the effects would be on the housing market if the president were to lower
we
interest
go.
rates without addressing the housing supply crisis
13.
nationwide?
Holy jeez.
If he were to what?
If the president has talked about having the power to control interest rates. In your opinion,
Damn.
what would you expect the effects
WFF
would be
open
on
from
the
halt.
housing market
Damn.
or interest rates without
Oh.
addressing the housing supply crisis nationwide?
Honestly, it's not our job to speculate on things the president might do.
Is
There we
separate
go.
that we need
It's
to
like, what?
address going into this. If we're going to move interest rates up and down, that's not going to be the end all be all to getting people into housing. We must address the housing supply crisis. But what impact do interest rates have on the housing market in general?
Well, interest rates really affect housing demand. So with lower rates, you see more demand, and higher rates, maybe less demand.
Thank you, Chairman Powell. I am out of time, but I have lots of questions that continue to work to close the racial wealth gap in this country, specifically focused on my district in Atlanta, where it is so prevalent. Thank you so much.
Gentlewoman's time has expired. The gentleman from Indiana, Mr. Stutzman, is recognized for 5 minutes.
Thank you, Mr. Chairman. And Chairman Powell, great to see you. And again, as I've mentioned to you before, always appreciate your steady hand at the wheel and not, I guess, getting out of your lane necessarily, but obviously you have a huge impact on the economy and what's happening there at the Fed. I want to kind of follow up a little bit on housing, as I've been hearing a lot about the housing concerns in Northeast Indiana, and I know you're not you're used to being beat up on a lot by folks all around the country, but I want to speak specifically to one particular.
You're used to people making fun of you nonstop, 24/7 for days and weeks on end.
Strong remarks about your policy when it comes to the housing
Colleen trying to curl again.
And,
starting to build a really big squeeze here. This is a 1 minute chart, but squeeze momentum bar is good. Long squeeze. So
because you'll have
watching
more
for
supply in the
expansion out of this
marketplace,
range
supply
in a
is
big
what
way.
controls prices.
The 5 minute play.
He went on to
No
say
squeeze
that,
on the
you know,
5.
interest
The
rates
1
do not
minute is
control
very big.
prices, and he explained that lower rates could stimulate activity in the market, and activity is what makes the economy work. And I agree with his comments, you know, overall, but I believe, as you said earlier, the economy seems stable.
I think the market is going to be ripping
ag and manufacturing
by Powell
it's not
saying
booming yet, but I believe most people are optimistic that the
cutting
good
rates
times are
sooner
coming
rather
and
than
the
later.
structure is set and in place. But when it comes to housing, it seems like that's where a lot of
Ever since they said
Americans
that, we've been
are
just kind of
stuck.
chooching up.
You know, they've had low rates, they've got a good mortgage rate, but if they want to make a move, they have to go out of that 3% interest rate.
UPXI,
into, you know,
it used to be a good
4.5,
trader,
higher.
but oh
Percent
gosh,
interest rate.
what they do
Thoughts
an
on
offering? No,
addressing
I ain't
housing,
touching that then.
because their prices are up.
You know, during this time it was a good trader, and it's had its pops since, but
Velocity is very slow.
not when you start looking like that.
I'd like to comment on any of that.
Sure. So yeah,
2 minutes.
We see the same thing you do in the housing market. It's tough. There's not people are locked in. They can't afford to get out of their house because the cost of getting to a higher mortgage.
Macron, Trump is signaling sanctions relief for China to buy Iran's oil. That coming from Financial Times.
Though, is to get inflation sustainably down to 2%.
I don't know how to play
stay
that.
there over a long period of time, and that is really what we can offer to them. And I think, you know, so if you go back to the beginning of the pandemic when we cut to zero and we did all those programs, we really saved the housing industry because they're the front line for interest rates. At a time like this, when rates are, you know, I would say modestly restrictive, not even moderately, but modestly restrictive, they feel it, and their customers feel it. We understand that, but we only have one tool for the whole economy, not just for housing. So it's something we consider, but we have to consider the bigger picture. And I do think in the medium term, as rates come down, you'll see normalization in housing. Of course, there'll still be a national housing shortage. I don't know about your district, but
yeah. No, there's a shortage.
Yeah.
I mean, considering the macroeconomics of interest rates, I mean, how much consideration do you take housing into that decision as you address interest rates?
You know, we're always briefed on it. We always talk about it. We always look at it. But at the end of the day, it's the big U.S. economy, the whole aggregate thing that matters.
What do we quote? Anybody got a quote on this thing?
About the agricultural economy a lot as well, but
10 seconds.
And manufacturing, it's got to be the whole. And
Ticker, Microsoft and Google. No, OpenAI has quietly designed a rival to Google Workspace and Microsoft Office.
Gap down.
That move and they're stuck.
You gotta be shitting me
so
right
I would
now.
just, highly consider, ask you to consider that piece of it, because when Americans can't move and Americans can't upgrade or move laterally even,
Freaking gap down.
keeps the economy
14, and you open at
holds the economy back a
13.50.
bit, when
I
Americans
mean,
don't
Coming
move.
from
But
the
again, I
information,
want to say thank
Microsoft
you because you
shares
have a
are seeing
tough
a spike
job,
in
but,
activity.
I haven't heard
MSFT.
from anyone in my district asking interest rates to go up. So I'll just pass that along.
OpenAI is developing what?
So with that, Mr. Chairman, I'll yield back.
Gentleman yields back. The chair now recognizes gentleman from Colorado. Ms. Peterson is now recognized for 5 minutes.
Thank you, Mr. Chairman, and great to see you, Chair Powell. Thank you
Finally
so much
design
for
a
being
rival
here
to
today.
Google Workspace,
I
Microsoft
wanna
Office.
Thank you for your
Oh.
long service.
Oh my gosh.
Served under many Democrats, Republicans. You've always been nonpartisan and done your job to put our country first, and we appreciate your steadfast leadership. And if you are not reappointed, you'll be very missed here.
I wish OpenAI was public.
I
That's
some
right.
concerns when I think
You
about,
do, and they know that.
you touched on this
And they're going to
a
milk
little
private
bit through the
equity
questions
all
today,
they can,
but around the independence
because they know as soon as they do go public, it's another payday, baby.
no matter what president you served under, Republican or Democrat, was to make sure that
CI
this
and
was not a
BMY.
political position while you
Reuters
brought,
reporting Signify's antitrust
news
lawsuit
that
against
some would
Wow, that's triggering.
Bristol Myers,
Okay.
accusing them of
happy about
illegally
because it
extending
reflected
monopoly
that
on
you had to do
Pomalyst
aggressive
multiple
inflation.
myeloma drug.
You know, when I think
CRCL.
about
Purchases to
conversations
overpay.
we've
That's
had coming-
Charlie
going through
India
the
and
global
Bravo
pandemic
Michael
and
Yankee.
economic fallout, and how we had to infuse money throughout our country to keep our services afloat, our businesses afloat. And while we suffered
Quite the
from
cliff
inflation,
here.
like the rest of the world, we had the quickest, strongest.
285. It's
We
broken
were
before and
leading
immediately
the
ripped,
globe,
so I'm
and
kind of looking
so
for that
much of
same thing to
was
play out.
because of your leadership. And so when I think about what this
245 break,
means, how important
something like
it is
this.
that there is independence. What are your biggest concerns about a potential
Look at that
successor
kid.
that doesn't prioritize that and wants to do what is politically asked of them versus what they need to do for the country, and what are their long-term repercussions if you're
That's
not
cute.
acting on addressing the economic uncertainties and trying to address inflation in this position?
So I wouldn't speculate on that, but I would say, the credibility on the Fed on price stability is very, very important. People believe that we will bring inflation back down to 2% over time. And once if they really do believe it and it's true, then that'll have big effects on not just short-term rates but long-term rates. If that were to be called into question, then you'd see long-term rates.
The longest watch streak in the hundreds, and then I dicked it up when I had internet problems. That's what usually happens. People would probably have a year-long watch streak had it not been with my constant internet problems.
Credibility on inflation is hard.
I know.
It's something we need to constantly.
I've nuked a bunch last week.
That's what we're doing with our current policies.
I'm Bristol Myers. Not
I think
seeing too
Veru
much
was one of them.
action on the name. A little volume, trading at lows. Cigna
Yeah.
files a lawsuit accusing BMY Bristol Myers
170.
of
So
monopoly.
Luca with 203 right now.
Thank you for bringing that up.
Let's see what happens on this 245 break.
How far we had come in our economy, things were
If we
starting to
get it.
stabilize, and we were starting to finally see a relief on the interest rates. They were starting to go down. Now they're holding steady. Can you talk about why the instability? When we look at tariffs around the increase in the deficit by the proposed big ugly bill that is being brought through Congress right now, and increasing our debt by trillions of dollars, and having our credit downgraded again because
20 months
we are increasing our
WTF
deficit.
trading is crazy.
So with
Thanks
this
for all the
economic
entertainment over the
uncertainty,
years, bravo.
Let's go,
where we were
Voganator.
going, we were
20
down
months.
for reducing our rates, and now we have to hold steady to address the instability. Is that correct?
252.
I'm sorry. Could you just briefly restate your question there? I
Guess
apologize.
so.
I'm going to do this the best I can with with Sam here.
Sam's like,
that with the
don't blame me.
With our having to address inflation, as we've started to see it, you were able to decrease the rates. We were starting to go down a little bit. We were seeing that our economy was finally in a solid place. Prices were starting to go down. And now, with the economic uncertainty, we're starting to see you had to hold steady, whereas everyone was projecting before this administration came in with these changes that it was going to continue to go down. Can you talk about why you have had to choose to hold steady on the interest rates?
So we just, we stick to what we're assigned to do, which is maximum employment and price stability. We don't have opinions on fiscal policy or trade policy or immigration policy.
Pop or drop time, boys.
Any one of another, or regulation policy. Other than that, we have our regulatory responsibilities.
They need to
So
push
we
it
take what
here.
comes as it comes.
Got a high, a lower high. This is the moment.
What they do, and we don't criticize
We
them.
either
We don't
break
have opinions about it.
that for a pop up
On
to
BA
this.
Boeing, seeing a little downtick.
Thank you,
Article
Sam.
by Politico. Alaska Airlines door blowout preventable. Investigators say, and Boeing FAA should have seen it coming.
Ooh.
Thank you so much. And thank you, Chair Powell, for being here with us today.
That's a little
I am
interesting.
Congresswoman Monica De La Cruz, and I am from deep South Texas, a large
WFF. Of course you gap up again. Of course you do. $16, suck a dick.
of Texas and Mexico. I serve as the Vice Chair for Housing and Insurance Subcommittee, and it's
On
difficult for
WFF,
families
opens
right
from
now
Hall,
to
now up over
afford a
140%.
home on
Shut
their
up!
Average paycheck. I'm committed to finding affordable housing solutions for the people in my community, but
Trying
also
it
for
here.
all over the nation. So, Chair Powell, mortgage rates remain significantly elevated relative to Treasury yields, with spreads well above historical norms. To what
the
extent
reclaim-
does the Federal Reserve
couldn't
believe
get it
its
yet.
balance sheet policy,
A
particularly
lot of volume.
the runoff of MBS holdings, is contributing to this widening? And how does that factor into your broader assessment of financial conditions?
I don't think that our runoff of MBS is a particularly large contributor to that situation. I also think it's not just interest rates. It's so many things around housing now. It's insurance, it's materials, it's land acquisition, it's labor. There's so many cost pressures that are pushing up housing costs.
Thank you. With that being said, moving on to an entirely different topic.
Boeing's not
if
really
the
moving
Federal
on that
Reserve
headline.
Focuses on issues outside its dual mandate, there are more opportunities for policy mistakes. How can you ensure that no
$20
other
loss.
climate policy work is being done at the Federal Reserve?
So it is a big risk to our independence if we were to stray into areas where we shouldn't, that really aren't part of our mandate. And I would agree that climate is the biggest risk. So
There we go.
really did the bare minimum. We did much less than I think people understand in the climate area.
I think it
All we
broke
did
by a
was-
hair there.
Was one piece of guidance, and then we ran one stress scenario, and by the way, didn't find anything.
Another
And I
attempt to
think
push it.
you don't look to us to try to take on a bigger role or really to play any role.
Can't tell if it was a
Climate,
real
which I
break.
personally think is an important issue and one that needs to be dealt with by elected officials. And for bank regulators just to step in and take that on without a mandate from Congress is not a good idea. It's not a good solution, and it's not a good way.
I want to see the ask at like
Reclaiming my time,
2:45:01 or
what
something
kind
like
of
that.
guidance did you make?
So for just the big banks, I believe, we asked them to monitor to have a framework for which they would monitor their
Damn.
risks. From
Right up to it.
That's all it was. And I would say that.
And the
that-
bid
yeah,
won't
that-
catch.
That guidance is something.
We'll move up so I can actually make some
When you
damn
say
money
the
on
risk
this.
For lending, the risk for lending based on political climate change, is that correct?
Okay.
Well, the idea
I had to
was
sell
that,
some.
The changing climate could. I mean, I'm not defending this. I'm telling you what the idea was. The idea was, climate change would cause certain kinds of assets to lose value, and that if banks are lending to in those areas or to those industries,
248's a level.
they should at least be able to
Juice
measure. It
monster.
didn't ban anybody from doing anything. It wasn't prescriptive.
We got
But at
these
the same
guys here
time,
now.
You have the feeling that the side effect of it would be to discourage lending, and we don't want that to be the case. So that's why we're looking at it.
Well, it does sound like that is policy
Shut up,
that
Sue.
is based on
ETH.
a political agenda.
Whoa, what does that
And
move on
when it
ETH?
comes to banking, it should not be based on political agenda, but instead
That's
on
Powell
facts
said
just breaking
rates
out.
modestly,
such as
not
credit,
moderately
facts
restrictive.
as monetary, good
Credibility of
monetary
Fed on price
policy.
stability is
So
very
I would have
important. If
to disagree
credibility
with you
called
on
into
the
question,
fact
would see
that
long rates
the
go up.
Federal Reserve
Powell said need
stayed
to constantly
outside
250.
or
credibility
outside of
credibly on inflation.
political
We are being
agendas.
careful
When it
on
comes to
inflation
climate
risks.
change,
Climate
that
needs to be
is
dealt
a
with by
political
elected
agenda,
officials,
and I
not
would
good for
have to
Fed to
disagree
take that
with
on.
you on that. Thank you. I yield back.
Gentlelady yields back. The chair now recognizes.
Did I call this exactly how it would go down? I mean, I don't know if that was a real break or just enough to dick the chart for the shorts, but it worked.
We don't notice
Break of the
bank
freaking level,
regulation
reclaim and go.
just go smoothly. But in 2023, we saw the effects of inadequate bank regulation, where we lost 3 banks. There was a proposal that passed the House that would have cut the pay rate of your bank inspectors and regulators down to 70% of the rate paid at FDIC. So you would have been
Coin, trying that level again.
70% of what the other major bank regulation agency did. I know you've announced things about headcount, but I'm focusing here on just the rate of pay. Fortunately, we were saved by not Superman, but Superwoman, Elizabeth McDonough, the Senate parliamentarian. But what effect would it have had on our ability to have good bank regulation if you had to go to all
glucose
the folks
monitoring stocks,
in doing bank regulation
DXTM,
at the
ticker
Fed
Abbott,
and say that their
MDT.
pay is going to be cut
RFK
to
Jr. says
70% of
HHS
the
is
rate
about
of
to
pay
launch
over
one
at
of
the
the biggest
FDIC.
campaigns in history to encourage
It would have made us
Americans
hard.
to use wearable health devices like CGMs. Watching CGM stocks on that.
DXCM. And Apple. Apple's got an Apple Watch that does that shit. Watch Apple.
Ticker DXTM continues to see activity on that note from Politico.
Why is Beta Chuck so low? I gotta tell him. Already back down. Oh, it's a good trade.
CAPR, Capricorn Therapeutics, getting a small pop here. Shares getting some volume, up about 18%. CAPR.
RFK talking wearables. Where is he talking wearables?
But you also have a liquidity fund, which I believe involves buying and selling foreign currencies. And so that begs the question whether, if you're allowed to buy the euro, whether you're allowed to buy cryptocurrencies. And of course, the president has said that some agency of the federal government should have a strategic crypto reserve. Do you or your successors have the legal right to take assets of the Fed and buy Bitcoin or Trump coin?
No, we don't, and we do not seek this authority.
I hope very much that your successor is not someone who tries to stretch existing statutes and come to an opposite answer. I'd like to focus a little bit on when you came before our committee last, I guess, in February. I asked you if you would take a holistic look at bank capital requirements, including the risk-based capital ratios like Basel III Endgame.
Oh shit, it's going again.
To make sure that you
members,
don't have
a lot of members have been
contraction in
asking
the
for
ability
a link to
provide
this
credit to Main
RFK.
Street
We're
businesses,
posting a
and you
link to
said
that
you would do
RFK
that.
live feed in the news desk.
So my question this time is, how does the Fed plan
NHS
to
history encourage
sequence
Americans to
the
use
various
wearable
capital
health devices
requirement
like
reform proposals,
CGMs.
that we expect to see in the coming months? In what order will you proceed with reforms on Basel III weight risk capital, leverage ratio, stress testing, and the GSIB service charge, knowing that these have interactive effects? Can you tell us what the sequence will be?
So I really do. This is the heart of what the Vice Chair for Supervision is assigned to do,
shit.
is to bring proposals to the board. And I read that as
soon as I bought this thing,
she's the one
freaking
who will decide that sequence.
juiced.
You're right there. There are many things, and it's really up to her to decide what's the timing, what's the priority. And I
Look at the spreads now.
know exactly what
120 by 310. I can't even exit.
I hope with you as the head of the agency, even if she is supposed to decide the sequencing,
25 cents
your
by
agency,
175.
would,
How am I supposed to even exit
tell
on
us what the
this?
sequencing is
So
going to
dicked.
be, and understand how important it is for people to know what the order, those various regulations
Gentleman's
will
time
have,
has
and I
expired.
yield back.
Gentleman yields back. The chair now recognizes the gentleman from Iowa, Mr. Nunn, for 5 minutes.
Well, thank you, Mr. Chairman, and thank you, Chairman Powell, for joining us again here. We have a saying, Iowa is nice, kind of boring. We want our Fed chairman to be just the same, and you're doing a great job at that. We appreciate it.
Thank you.
Nothing against boring. We like that too. Look, you have a lot of great staff that come from Iowa as well. I appreciate you having them.
Looking
on
for a
the team.
1 minute on this thing.
We also want to recognize the fact that, folks in Iowa are still feeling the challenges of the last 4 years. We're middle America. It is
I'm gonna still 5 to
the
see where
heartland
it
of the country,
gives me.
But it also means
No,
that
no
impacts
fill.
that change things on the coast
No fill.
don't always get felt the same way in the Midwest. And so as a result, folks are stretching every dollar as they face everything from higher grocery prices, eggs, to trying to buy just that first car or even maybe that first home. And interest rates to them matter as they do everywhere else, but they're even more.
It's going to have to wait now.
Now, I will offer the president has made great strides in making progress for Iowa families.
1 minute is now over basically
Many
83.50.
still feel, though, that inflation spikes impact them. And with the president focused on rebuilding the middle class, I'd like to talk a little bit about
Filled
how
at
the Fed ensures that
51?
this heart of the heartland can feel the benefits of a soft landing as you've laid out.
Oh, you're asking me how you will feel the benefits of the well, I would think.
Good exit. I got lucky on this exit.
Pretty open-ended question. So I think is to keep the economy strong.
Did I top tick Tommy that? I think I did. Yep. Top tick Tommy, boys.
That's really what we can provide is a long period of stable prices. And we define
And
that
it didn't
as,
cock.
As Chairman Greenspan used to.
Literally top tick that
Make
candlestick.
economic decisions in their families and their jobs.
It's disgusting.
Where they don't have to think about inflation all the time. And we're getting back closer to that place, but we're not quite there yet. That's the main thing we can now do. And once we restore price stability, very soundly, that gives us the ability to react more strongly to downturns in the economy without having to worry about inflation. And so that's, we have limited scope, but those are two very, very important things that we can deliver that benefit all families.
Now it goes cock.
So I guess I would also like to focus here on the short term. The Fed Reserve has slightly lower rates to ease borrowing costs for rural communities, and long-term trade negotiations strengthen our global position.
Oh my
Would
gosh.
you agree that the agricultural sector in particular is vulnerable to both interest rates and recognized
bullshit.
international markets? And how would the Fed evaluate the unintended consequences of policy on commodity-dependent economies in a state like Iowa?
So we have a number of our Federal Reserve
Get over 84.
represent states which have extensive agricultural
By a lot.
operations and families and farms.
No.
And so we hear from them kind of all the time, but we hear from them in great detail around every FOMC meeting. And we understand that times, pretty challenging right now in the agricultural sector. We take that into account. Ultimately, we're responsible for the aggregate level of the economy and for keeping inflation under control and maximum employment. So, but we do very much think about and take into consideration the agricultural sector.
I'm literally.
We appreciate that evaluation. I know there are farmers back home as well
Like,
as.
this shouldn't be even a possibility right now. 95 cents?
I want to talk a little bit on the national security side as the vice
There's
chair.
more intrinsic value there.
Foreign actors begin weaponizing treasury sales or dollar reserves. What tools does the Fed have to help preserve financial stability and the dollar's status as a reserve currency within the world?
Essentially what
230
what makes us the reserve
on the bid
is a few things. It is our great democratic institutions. It is that we have open capital markets, very open capital markets, and it is that we have price stability and the rule of law. Those are the things that make you the
Shares of
reserve
Dexcom
currency.
spiking to the high
Keep
84.80
that
on
status as long as you
a
maintain those things. Of those
post
things,
saying
the
that
thing we
RFK says
contribute is
HHS
price
about to launch
stability
one of the
over
biggest
long run.
campaigns in
So
HHS
people who wanna
history to
invest
encourage
and use the
Americans
dollar, they can be confident
to
in the
use
value
wearable
of the
health
dollar
devices
over
like
time. They don't know
CGMs.
It won't fluctuate wildly.
His vision is
Dip and
every
rip over 80
wearable in
So
40 years.
84.80 here.
Really, Treasury is responsible for
Oh my
stewardship of
gosh.
the dollar, but we have that role to play as well.
Very good. In the brief time that I have left here, I just came back from a trip
No,
to Saudi and the Arab
Secretary
states.
Kennedy is now
big
tweeting
concern
wearables
here
with power of
in the
health
world
back
we're
into the
living in
hands
right
of the American
now,
people. We're
with
launching one of the
Iran
largest
looking at
campaigns in history
asymmetric ways
to encourage their use. And now being tweeted by Kennedy, DXCM at
That's
highs.
from Political Reporter.
feel confident the Fed is doing everything they can to protect
The
us from
speculative
that cyber threat.
small cap
Our
stocks
part of it is the financial.
also seeing increased activity. WL.
Watching ABT, DXCM again,
Oh yeah,
SCNS.
WLDS. That's them,
Now
man.
a tweet out by RFK. Abbott seeing a big
Forgot about
bump
that one.
to highs.
That's wearable.
That's on ABT. RFK says wearables put the power of health back in the hands of the American people. More color on that in the news desk. Also, seeing a little action in TN and DM.
No ticker DRIO. Delta Romeo.
TNDM, tandem diabetes,
small
getting a
cap
pop
stocks
here as
activity.
well on that news.
I'll play a few of these. Play a few of these. See what they do.
Also, ABT, Abbott Labs.
It's literally disgusting that this... How are the options? USO tank in here.
I remember I was watching that SENS, a little delayed move on that one. Following those headlines at Sensionics as well, SENS.
All these are on the bid. The spread is over $1 wide most of the time. Coin finally broke through.
Closed down. We didn't know it was going to go.
Also, another name on watch is WLDS.
The big reason for that was the sort of the strength that we had at the Fed, and the country came together and said, we're going to figure this thing out, and we did that. You didn't panic. You guys were very independent. I think everyone did their job. The reason I say that is because I do worry about the independence of the Fed now going forward. So question, can the president appoint himself as the Fed chair?
It's a question, but not for me.
You're the Fed chair. You should know. You should know what the requirements are to be the Fed chair. Can he appoint himself?
I don't know.
You don't know that question? What is? Well, you're the Fed chair. What is the requirements to be the Fed chair?
Nominated by the president, confirmed by the Senate. I think you probably have to be a U.S. citizen, probably, but I'm not sure.
Okay, so far it seems like the president fits those. He's a U.S. citizen. He can propose himself, and I assume that the senators over there could confirm. Why couldn't he become the Fed chair also?
Again, not a question for me.
Okay.
I wouldn't speculate.
The reason I ask that is because, again, I do think that we have a great system because of the independence of the Fed. And it worries me that more and more, and I assume, I'm not going to ask you this.
I can't believe this is
I would like to.
filling there.
Read all the things that he says about
Oh, now you fill me at 3.
Or some people tell you. Yeah. But I won't tell you what they are. But I'm glad you've been independent. And I think that that's so important because you do look at long terms. It's not missed on you. You know that we want you all to lower the rates. You know that, both sides, right? You get that. The answer could be yes or no.
Honestly, I'm not sure I do know that. I've talked to a lot of members
from
privately.
our side, we'd love to see the rates go down. And I've heard from a number of my colleagues on the other side, we'd love to see the rates go down.
Well, breaking that 11, that's a big deal.
Privately, you're doing the right thing. I hear that from a lot of members privately.
Yeah.
We have to do, we're appointed and confirmed, my colleagues and I do what we think is right.
That's exactly right, and that's why I say it, because I think it's not lost on you that we all want the rates to go down. In fact, it's really real when you say, someone's locked in at 3% at their house, their interest rate, so they don't want to move and get a 7% rate. I mean, they don't want to pay that. That's real. My colleagues mentioned that, and that's truthful. And that's why it's so important to be independent. Now, lastly, I do want to ask, because again, it's so darn important to have an independent Fed chair and an independent Fed. Secondly, the dual mandate. I respect the chairman very much, and he's a friend. Hope that doesn't hurt him politically. But that being said, he did ask you a question about the dual mandate in a way that he quoted somebody else and said, is that the way you see it? I do want to see, how do you see the dual mandate? It seems to me that you gave a little bit of a preference to price stability over maximum employment. Is that the case?
No, I think the two things are equal under the law. But if the thought is, we haven't defined it in exactly the way that the chairman said, but notwithstanding that, I do think it's a reasonable way to define it, which is the maximum employment is the maximum level that's sustainable or consistent with price stability over the long run. That doesn't make it, to me, an inferior goal.
Gentleman's time has expired.
Thank you. I think it's
you,
kind
Mr.
of
Chairman.
implicit in a way.
The chair now recognizes the gentlewoman from Michigan, Ms. McLean, for 5 minutes.
Thank you, and thank you so much for being here. I appreciate it. As a business owner, small business owner myself, access to capital is extremely important to me. So I want to talk a little bit about the Fed's balance sheet and just get a better understanding of how we're thinking about it. I mean, some experts say that the Fed's balance sheet or large balance sheet is distorting the markets and keeping long-term rates
Yeah, they are.
too low. Also, I think it limits the access to capital, right? Historically, if I'm accurate, the balance sheet's been about $4 trillion prior to the pandemic. Then we raised it, almost doubled it to about $9 trillion, and now it's on a kind of a downward trajectory to about 7.2. Again, if my math is right. Do you think we're on the right track in shrinking this balance sheet?
I do, yes.
I'm trying to get a sense of what the landing spot, in your opinion, should be. Do you think we'll get back to the $4 trillion?
No. So we're in what we call an ample reserves regime, and what that means is that the quantity of reserves.
A lot going on today.
And this means the
lot
quantity
going
of
on
reserves
today.
can fluctuate without affecting interest rates, and we think that's a good thing. What that means is there's going to be a lot of liquidity in the banks and in the financial system. That's a good thing. There wasn't enough liquidity before the global financial crisis. That was one of the problems. We have some shrinking left to do on the balance sheet, but we're not going to get down as far as you asked.
Where do you think we'll land? Because let me start. I'm sorry. Where do you think we'll land?
You know, I can't give you an exact number, but we're going at a pretty modest pace now. We've slowed down, kind of cut in half twice the speed. We think we can go for a good while at this speed, and we'll learn as we go.
So you think the trajectory, so to speak, will remain?
Yes, and I think the fact that it's quite a gradual trajectory now is going to enable us to find that level that is ample and not scarce. When reserves are scarce, you get a lot of volatility, and that doesn't help. So I think that's a good framework.
How'd that hit 35? So that's the shit that just messes charts up.
And you're not concerned in terms of the access to capital? I mean, as a business owner, that's what I look at is I got to be able to get capital, and some people are saying, we're really hanging on to our cash.
I think honestly, I think if you took the trouble to go back to a much smaller balance sheet, it would have no effect whatsoever on capital ability for companies.
Why
You wouldn't
do you
do
say
that at all.
that?
We're not pulling capital away from companies. That's not what's happening. It's just you have a big balance sheet
giant
where
cock and
there's
drop.
a lot of liquidity. The result is there's a lot of liquidity. Banks are flush with liquidity for the most
32,
part.
Phil.
And that actually
It was literally at 42 when I hit the sell.
Probably wouldn't have much of an effect one way.
Eat her dick in me!
So you're
back to a smaller balance sheet.
So you're comfortable with the liquidity. You're
I
comfortable.
knew it. I knew I was going to do it.
Yes,
Access to capital. Excuse me.
I mean, we look at credit availability for smaller businesses, and right now conditions are a little bit tight.
Yeah, it's tough for people in my district. It's
I would say that they're not terribly tight, but we do see that there's some tightness. But that's not really balance sheet. That's just that banks are perhaps a little risk averse in this uncertain environment.
I think it all goes to
WLDS.
On NKTR, talk of a price target raise at Wainwright. That's on NKTR.
No one cares.
To a new street high.
Surface that we may not be seeing maybe on top of the
Damn,
surface,
that's
whether it's in
terrible.
commercial real estate, private credit, regional banking, anything you're seeing underneath the surface that could derail the growth path.
Not really, no. I mean, you mentioned there are a lot of pots that we need to watch to see that they don't boil over. CRE, has been a problem for 5 years. We're working our way through it. I think we're making good progress there. It's not getting worse. It's getting a little better. Private credit is, has its real positive attributes. A lot of it's not funded by deposits, so it's not. As long as it's not funded by retail or by deposits, it's actually fine for financial stability. But it's a very big and fast-growing sector, and it hasn't been through a real downturn. And it's quite diverse. So I think it bears close watching. I mean, asset prices are high, but leverage is not particularly high for corporations and households historically. It's not particularly high for banks. Banks are well capitalized. So I think overall financial stability conditions are, are not in a place where we worry a lot.
So we're really poised in a pretty good position economically.
Gentlelady's
I
time
think
is
so,
expired.
yes. Absolutely.
Thank you, Mr. Chair. Thank you.
The chair now recognizes the gentleman from Illinois, Mr. Castor.
Fed Powell says asset prices are high, but leverage not particularly high.
We had spoken in February about some concerns I had about some of the cuts in some of our economic data reporting agencies, and I think you'd said at the time that you didn't have a concern, but if you would alert us if there were
Some
concerns.
more headlines from Powell.
You mentioned
Powell
this with Mr.
says
Licardo,
the
and I
commercial real
gather
estate
if I'm
is
paraphrasing
getting
you, I think you
worse,
said that
you're
not concerned about your
working
access
our
to
way
data
through
right
it.
now, but I think you
Says
said that
asset
you don't like the direction.
prices are high, but leverage
all
not
the
particularly high.
I wonder if you could
normal
speak
chucks.
to, well, first, I'm going to work under the assumption that as the chairman of the Fed, you probably have more access to economic data than just about anyone in our country. I am more worried about the impact on smaller businesses that don't have your access to data, whether, someone thinking about hiring decisions, looking at regional inflation rates, all the data we get from those resources. How concerned should we be, if an efficient economy depends on, at some level, on equal access to information? How concerned should we be that our business community, with some of these cuts to BLS and elsewhere, is not going to be able to allocate capital as efficiently as otherwise would be in this moment?
The reality is that essentially all the data we use overwhelmingly is public data. The difference is
Psychedelics.
The difference is that this is our job, and we follow it
RFK
very, very closely. But
talked about discussed psychedelics.
CPI reports,
assume in a good way.
Analysis of that by many economists, internal and external.
It's been his
spend
MO.
all of our time on this stuff, but I think large businesses have the exact same.
Well, but I'm talking about BLS has announced they're cutting 350 indexes, so that data is no longer going to be public data.
That's a different thing. Okay, so if you're asking about that, I don't want to say, and it wouldn't be true to say that we can't do our jobs with the data that we have now. That's just not true. The data overall, we get the data. It's all these jobs you're always going to make mistakes. It's never going to be certain in any time, but. I would say seeing that survey sizes are shrinking and we're seeing more volatility, for example, in the labor market data, lower response rates and things like that's not good. We should be getting better and better and better. Yeah. I would add the private sector, by the way, we use more and more big private sector data sets. And that is a relatively new thing for the last 5 or 10 years.
Yeah, and oftentimes
it doesn't replace the U.S. government data has been the gold standard.
Yeah, and I guess I get concerned because some of those data sets, of course, you have to pay for, and not every business can afford that. I want to, staying on the data point and picking up on what Mr. Himes was saying, I think only a fool would predict they know what's going to happen in the Middle East right now. But I get concerned that we have, trying to handicap, the Saudis have been very open that they would like to not see the price of oil get above a point where they're going to lose market share, much to the dismay of U.S. frackers. U.S. frackers have been wanting to see it go the other direction. I don't know how to handicap which group is going to have more impact on Trump right now. But I would like to have some smart person out there taking a position on what is happening in oil markets. And the
blah
Energy Information Administration has now announced
I want to hear it
they're not
about
going to run the International
options.
Energy Outlook anymore.
It's a good trade.
Should we be concerned about that piece of data as we think about what's happening in global energy markets right now, given all the pressures between various suppliers of where they'd like to see the price go and the wild card that is Iran and the Red Sea?
I don't particularly know that specific report. I know there are many entities that do data analysis around energy and oil and the availability of it and the price of it and all those things. So I can't speak to that one report.
Okay, well, again, just my own experience before coming here, I relied a lot on that, and if I was in my past job, I would now basically have to rely on the International Energy Agency, which in general was not as robust as the DOE data. And so it's a gap. And I guess maybe I'll just close with, I think a lot of this gets tied together with the Office of Financial Research, which would presumably be synthesizing a lot of this information for you. Your predecessors, Janet Yellen and Ben Bernanke, both recently urged the opposition to cuts in Office of Financial Resource that are in the bill that the Republicans are pushing through. Do you share your predecessors' concerns about the importance of that agency to synthesize some of this disparate things so that you can do your jobs, that the American people can do your job, or do you share the views of the Republican Party that agency is not necessary?
You know, I'm not going to take a position on the bill, on the reconciliation package on specific issues like that don't relate to us. I will say generally, I'm a big fan. The Fed is a big fan of good data.
Hot.
Gentleman's time has expired. The chair
Damn.
recognizes the gentleman
Stay
from
up.
Indiana, Mr. Downing, for 5 minutes.
Thank you, Mr. Chair. Our national debt now exceeds $36 trillion. Congressional Republicans have made it our mission to rein in out-of-control spending, from repealing the Green New Scam, enacting common sense.
Good God, this thing's all over the place. I can't even figure out where I'm in at. 51,
Mr. Chairman,
40.
you've repeatedly
Somewhere
said
there.
our national debt is not currently at an
I gotta get out.
unsustainable level.
It's just pulling back
It's
too
on an
much.
unsustainable path.
Jeez.
Describe what the point of no return looks like when our debt reaches an unsustainable level.
So there's no way to know exactly what that is,
Sympathy play, kind of Coinbase, but it hasn't had a sympathy move with it yet.
It will not be sustainable. So
Oh, it's hard.
We don't have oversight responsibility over the fiscal authorities, but that's traditionally what my predecessors have limited themselves to saying, and I'll say it too.
And what effect would that have on the economy?
So you'd see rates go up. It would be very challenging to. I think if you wait too long to fix the problem, you'll have to fix the problem eventually. If you wait too long, it'll be much more painful.
Yes. I believe the U.S. dollar status as the global reserve currency
Can we sweep it under the rug long enough till I'm dead?
and increases standards of living. The Trump
Mr. Powell.
administration is actively negotiating to ensure we are no longer taken advantage of by our trading partners. At a previous monetary policy task force hearing,
Like, can I make it so? I mean, is there a circumstance where this could be somebody else's problem?
global reserve currency status. Do you agree?
I do.
Thank you, sir. Let me turn to oversight of the Federal Reserve. I certainly believe
also not my
that
kid.
had the Federal Reserve responded faster by raising interest rates earlier to combat the inflation crisis of the previous administration, that interest rates would not be as high as they are now. I hear frequently that from my constituents that they're increasingly getting priced out of the housing market while interest rates remain near record highs despite the rate of inflation coming down. So, Mr. Chairman, I appreciate the Fed's increased transparency under your leadership, and you've always welcomed congressional oversight into the Fed. And I also appreciate the comments you've made about the limits of our knowledge demanding humility. So with that in mind, can you point to oversight practices of other governments into their central banks that could be replicated with the Federal Reserve?
That's an interesting question, and I want to think about that. I'll come see you and we can talk about that. I think we have effective oversight from this committee and from the other committee in the Senate, and I think that's important.
Would you be supportive of an outside independent group of analysts or economists that conducts a periodic review of the Fed's economic assessments and modeling?
So those are ideas.
Bull strike is very liquid.
On VRTX, seeing a little volume on the name RFK mentioned Dronovics.
I think, like my predecessors, I've fostered, more and more transparency at the margin, and I think that's appropriate. I think transparency is critical for democratic legitimacy. So I've tried that, but I'll devote some more thought to that question.
Well, I look
New
forward
egg juice and watch that one.
Thank you for your responses, and on that, Mr. Chairman, I yield.
Gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Gonzalez, for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being here with us today. I understand commenting on some policy issues.
So it's not going to move now?
But I have one that I think is heavily impactful on the American economy right now, and I want to underscore the scale and impact of the ICE raids that we're seeing across the country. Pew Research estimates that over 10.5 million undocumented individuals live in the United States, more than 3.3% of the population today. And according to the Nonpartisan American Immigration
big
Council,
curve.
removing this workforce could cost the U.S. economy between 1.1 and 1.7 trillion in GDP and billions in tax contributions, including
You gotta be kidding me!
$6 billion in Social Security and $5.7 billion in Medicare funds that are increasingly critical as our population continues
To the second, man.
resources that are paid by these.
It's like they take my shares and like, thank you very much. Now we will take your shares and move them higher and sell them.
Which would establish
To the second.
temporary work authorization for
Sitting here watching paint dry, sell my 500 shares, juice.
3 years or longer and have never been in any kind of trouble, no criminal liability or nothing else. Additionally, last week I sent a letter to President Trump urging him to halt indiscriminate deportations and issue an executive order
Get off my
exactly
dick,
what it
MMs.
does to protect American businesses that need a workforce. We have something the last I heard.
All
I
right,
think we have 7
Bull
million open
on
jobs.
watch
We have
for the
record
11:35 break.
We have 7 million open jobs that we cannot fill by American workers. What economic consequences would we face if these individuals were removed from the workforce, even further hurting the situation that we're in? Could this disrupt even more the economy even more severely than what we experienced during the Great Recession?
So, as you might expect, Mr. Gonzalez, immigration policy is just not for the Fed to comment on or to, let alone make, and so I'm reluctant to.
No, psychedelic news coming from New York Post. Just a single dose of psilocybin could relieve depression for 5 years. That goes for research note.
This is a bank
MNMD has seen an increase in activity on that New York Post article.
Billions of dollars of construction
MNMD.
across the country that are timelined, and contractors are not able to fulfill their obligations.
Come on, give us the juice here.
In the middle of the jobs to finish.
7,
I've heard stories
yes.
in Texas, at least, where people are pouring concrete at midnight.
MNMD
Are y'all having any kind of
continued
conversation with
activity,
the administration
new highs
on how this could impact
Post,
the
New York
economy
Post.
and our GDP?
So we have very deep connections all over the country through the reserve banks, and we hear some of the same stories. But for us, it's
That's 250, not
we're not
2,500.
We don't report this to the administration. We don't just publicly have a view on it.
These shares do I have?
So our responsibility, maximum employment, price stability, many other factors affect
Great
those goals.
trade.
We don't
Great
make
trade.
those goals. We don't make the policy.
Great trade.
extraneous
Watch
areas,
Bull.
which include things like
Back the
energy,
Bull.
for example, or
Beta Chuck says he's working on getting a new mic.
any number of things. We try to stick to our.
Hopefully he has it
because
by
that's
tomorrow, he
being
said.
independent.
It's really
We're in
low.
such,
I haven't cranked all the way.
Unconventional times that I would love to have that. It would be great if y'all were having those conversations in the administration. But moving on.
I feel like when
US
you turn on the
dollar has also
RFK
long
one,
been
he's
the
moving
world's dominant
markets,
reserve
not this
currency,
thing.
But that position is facing growing pressure. As of 2024, BRICS nations led by China and including Brazil, Russia, India, and South Africa have stepped up efforts to reduce their reliance on the dollar in global trade. China, for instance, has expanded the use of the yuan in energy transactions and cross-border payments, while BRICS is actively developing alternative payment systems that could erode the dollar's global role. At the same time, inconsistent and unpredictable economic policies from the White House have contributed to a drop in the dollar's value, now at its lowest level in 3 years.
30 and
What
33.
risk does a weakening dollar pose to our economy, particularly to U.S. borrowing costs, inflation, financial stability, as China and BRIC nations expand their efforts to challenge the dollar's global dominance?
So, by long agreement and custom and tradition, the Treasury Department has responsibility for the dollar and dollar stewardship. I would say we also, are involved in payments policy, and we're very aware. We and the other major economy central banks are very aware of other payment developments, and working on ideas to make sure that the payment systems that support the dollar and other other major currencies of the democracies are well supported by that infrastructure.
Thank you. I yield back.
Gentleman's time has expired. The chair now recognizes the gentleman from Florida, Mr. Ardopoulos, for 5 minutes.
Thank you very much,
Watch
Mr.
the
Chairman.
break of
Thank
this
you, Chairman Powell, for
11:30.
being here today and answering these questions for us is very much appreciated. Looking back with the last few
ASTS,
years,
still
I
juicing.
think the
Jeez.
question a lot of people have been asking
Jeez.
me as they really were suffering through the challenges with higher prices across the board. I know they got as high as over 9% inflation in 2022. And there was a lot of discussion about, was it Ukraine, was it transitory, was it post-COVID? What was the reason? As you look back now in those years, and this is your field of expertise, if you look back in your teaching,
what are we doing here?
What would you blame the increase in prices on back at that time period?
So I'll start with the fact that it was extremely global. So we saw there literally was a point at which not a single country in the world had inflation 2% or below. So it was everywhere. So you have to look to common factors. And I would say that the pandemic, closing of the global economy and then the reopening of it, in all cases with some support, that's a big part of the story. Clearly,
Market's straight juicing right now.
For fiscal policy, there's a role in that for monetary policy, and I like to think all of those factors were involved, and but when it happens everywhere in the world, you can't look to one thing. You got to look to something, a common factor, and I think that
Break at 31. I'm long again. 11:31.
And building
for
that
cuck and
idea,
go.
I mean, I know I hated Monday morning quarterback, but if you had to do it over again, you had this opportunity. As you know, the rates stayed pretty flat in 2021 as inflation creeped up. What would you do differently today if you had the opportunity to look back and make some changes?
I have perfect hindsight in this.
Yes, sir. If you had it, yeah.
Sure. So I would have raised rates a little earlier. I honestly don't believe it would have made much difference to the outcomes, but we would have looked a lot smarter. But that's something I would have done. The other thing is,
on HPE, coming from NVIDIA blog, and HPE and NVIDIA debut AI factory stack to power next industrial shift. That's coming from NVIDIA.
So that was not at all expected. So I don't know how that would have affected my behavior, but somehow things really came out much better than everyone had anticipated. Was that it would take high unemployment to restore inflation, but it didn't.
And the other pressure point that I hear a lot of people talking about is this idea of the tariff issue.
Really bad execution on my part there.
Now that the sky is falling, but it seems at this point at least that the inflation rate is pretty steady. And how many months of steadiness do you need before you might look at an even larger rate cut from the 4 point?
On TOST mentioned on CNBC. Keep in mind,
right.
Josh Brown's been mentioning TOST for quite some time. We are seeing volatility yet again on TOST trading at highs.
Are behaving really well, and that was our forecast, but it's good to see it coming true. I would say we expected that tariffs take a while to work their way through the distribution chain, several months, and I would say we would expect to see meaningful effects, kind of June, July, August. And if we don't,
of course,
we'll be learning something. We have a highly adaptive, flexible economy, and it's certainly a possibility that the tariffs that we expect will come through in a much smaller.
Coming from CNBC, says NVIDIA CEO sells $15 million worth of stock, first sale of their $873 million plan.
The other thing that would lead us to want to cut earlier is if we actually did see some weakness in the labor market of a troubling nature. We don't see that. Those are the two things we'll be looking for.
And the last question I'd ask is, at that same time period where, as you put it, the global issue of inflation, I get that, but at the same time period, there's pretty radical increase in spending in 2021 by the federal government. What factor did that play in the inflation level?
Certainly a factor, I would say. As I mentioned, fiscal policy definitely played a role. I think if you take a step back from those things, what happened was demand came back so much stronger than we expected. You remember, if in late 21, early 22, you had the pandemic still going on, Omicron going, was it 21? Yeah, 21 into 22. And demand was just much stronger than people expected. And by the way, the supply side was much slower.
Well, this thing's breaking dick for a little bit. It was 5-minute bullshit.
Up supply chains. The supply side took a long time to recover, and demand was much stronger. That story created the high inflation. Behind that, fiscal policy played a role. The spending did. Monetary policy played a role. And the pandemic.
But you would agree that the government spending did play a significant role in that as well?
Yeah, I would say that.
Okay, thank you. Thank you, Mr. Chairman.
Gentleman yields back. The chair. Now recognize the gentleman from Illinois, Mr. Foster, who is also ranking member of the Financial Institutions Subcommittee for 5 minutes.
Thank you, Mr. Chair. Following up actually on Rep. Gonzalez's line of questioning, so in addition to your dual mandate, do you believe that that preserving the U.S. dollar and the primacy of the U.S. dollar is part of your job description?
I think it's something, it's not formally part of our job, but yes.
I'm selling these, and the price is going down. The bid keeps moving up on this in a noticeable way. It's very interesting. I wonder if this is going to be like, looks terrible, it doesn't matter, going to rip constantly. Something to watch.
Frankly, due to a president who kind of disregards conventional economic theory and whose answer to nearly every question seems to be, well, I haven't decided yet, or maybe I'll give you an answer in a couple of weeks.
I can go 5 minutes on Circle.
Now, one of the things I've been very
with the VWAP there.
in terms of the job market is artificial intelligence and the coming impact there. We're seeing predictions by the leaders of the leading AI firms that within 1 to 2 years, a majority of entry-level white-collar jobs will be gone.
100% true. Speak it, brother.
To market that propose to do pretty much exactly that, and I anticipate pretty high uptake of those things to essentially eliminate back office operations in small businesses, things like that, or intermediate-sized businesses. And we're already seeing layoffs in the big tech firms. Microsoft had a big round of layoffs where 40% were computer coders and maybe another 20% supervisors of computer coders. And so I was just wondering, what sort of analysis is the Federal Reserve doing about that job shock, and how is it going to affect your dual mandate when it lands, perhaps as early as the next year or two?
So I think economists everywhere are doing work analyzing the potential implications of AI for employment.
I took a Teladoc TDOC, share seeing increase of activity in Kennedy.
Both consumers and
expanded rural health access through innovations in telemedicine and AI-powered diagnostics. So Teladoc is seeing increased activity on that.
Any positive statements with great
Love it, Beta. Love it.
Certainly a possibility.
Why is Teladoc so cheap right now?
At least at the beginning, AI will replace a lot.
Go Beta, go Beta, go. Go Beta, go Beta, go.
Just augmenting people's labor. Over a long run, the history shows that generally new technology raises productivity and creates new jobs over time, but it can be disruptive.
If you don't have Beta Chuck yet, what are you waiting for?
Highs for Teladoc, TDOC on that note from Kennedy.
They say that 2 years from now.
Members watching Teladoc, TDOC, Merck, MRK. Volume move off of continued commentary.
Exclamation point news.
Certainly everything you would want.
25% off. They have a 2-week, I think, free trial. At least use that.
Members, keep in mind we did post a link to that.
High beta squawk included in the free trial. They'll give it to you. I think it actually is included in the free trial.
That
use the damn free trial.
That hearing, it is that link is in the news desk.
Which one is Beta Check? It's Benzinga. The first guy you heard that sounds like he's on a gaming headset, that's not his normal microphone. It's jacked up today, but that was Beta Chuck. The other guy you just heard now was Trade Exchange. You really should have both. I mean, I can't, but if money's an object, high beta squawk, Beta Chuck.
The playbook is really in your hands and in the
use the 2 weeks. If you make enough money for a month of it during that 2 weeks,
that will be what we do, and we'll try at the same time we
roll it into the next month.
So we don't
how much did I make on that? A lot.
Talking about transitioning people.
I don't know how many shares I took. I think I finally got like 5,500 shares. I started just clicking it. Yeah, 5,500 shares.
Think about it. I urge you to think about it and what you will do if that job shock hit.
On VRTX, seeing a pop now. We mentioned earlier that it was mentioned by RFK. Now that as well being mentioned by numerous other wires. That's on VRTX, trading at highs of the day.
I'm not really interested in.
And other banking regulators, as well as FinCEN, urging action. Can you summarize what you have in mind doing in response to that letter or what you've learned when you resulted from it?
So this is on the check fraud thing. I just know we just started a request for information, and I think we're starting a process of gathering a bunch of information, and really focusing on that issue.
Okay, and if you could say what you're actually going to do in response to that.
Gentleman's time has expired.
Thanks.
Thank you. Yield back.
Gentleman yields back. I now recognize myself for 5 minutes. Chair Powell, we've discussed this several times before, but the issue remains, so I continue to raise it. I sent you a letter several months ago urging you to seek public comment and permanently revisit the SLR and ESLR, particularly given the constraints current calculations places on market participants' ability to intermediate in the Treasury market. I'm glad to see that you're meeting tomorrow to discuss the issue. And I know you've discussed this with Mr. Flood, but I want to clarify a couple of things. The last time you testified before the committee, you said you were concerned about the levels of liquidity in the Treasury market, and that one obvious thing to do would be to reduce how binding the SLR on intermediate capacity. Are you considering changes in the SLR and ESLR, and will you consider exempting treasuries and reserves from the SLR and ESLR?
So I do think we've effectively raised the capital tax on all kinds of intermediation activities, and that certainly includes treasury market activities. So I've long favored leverage ratio reform, and so we're putting out a document for comment, which will seek comments on one particular proposal and alternatives to that proposal, as I mentioned earlier.
Which I think answers my next question, which will you look at changes at the leverage ratios that constrain a bank's ability to participate?
Yes, that's the idea.
In your view, would allowing netting mechanisms for derivatives on treasuries encourage participation in the market? And would you consider looking at
Hell is this
that
Yas?
with your prudential counterparts?
This is for derivatives. My first phone call on that would be to Vice Chair Bowman to ask her what she's planning. But I'm certainly open to that conversation.
Josh Brown,
Absolutely.
CNBC is
Let's
teasing
discuss the
Josh Brown's
framework
next
review.
long idea.
You said that
pick.
the review of the
CNBC
consensus
put up that
statement is
commercial
complete,
break.
but potential
If you've seen
changes to
increased
communication
activity,
strategies
Delta
and
Index
tools
standing.
may continue into the fall. When can we expect the framework
Circle
review to be
really
complete
tight 5
and
minute here.
provide opportunities to receive feedback from members, industry, and the public on any changes the board is considering?
So the framework review, there are two parts of it. There's the consensus statement, which contains our monetary policy framework, and then there's communications. On the first, the framework, we've had the meetings that we needed to have to talk about
not the 03. We need a 03 break.
The price stability mandate.
Look at that horse shit. They know.
How we might change the framework. Now comes the discussion between participants on the committee, all 19 of us, about exactly what language to use in the new framework. And we're just entering that phase between these two meetings and at the July meeting, and hopefully we will be able to announce something near the end of the summer. And I expect that will be, and by the way, we've talked about, we've laid this out a little bit in the minutes as we go.
One last question. The MPR notes that the FOMC's policy deviates from the first difference policy rule. Will you provide a justification for why the FOMC decided against that?
5 minute cuck.
Against the first difference rule? Mm-hmm. Well, as you probably know, there are 5 rules
Dip
that
and
we're
rip.
talking about there, and the first difference rule is the one that calls for a price hike. The other 4 say that we're in the right place. So the Taylor rules generally are very
Wait, did this actually break?
For where we are. It so happens right now. First difference rule is a very interesting concept, which we can talk about online, which has a lot of appeal, but it can
Coin trying to go.
And right now it's calling for a rate hike. The other 4 are calling for us to hold our policy where it is.
The irony. Thank you, Mr. Chairman. I yield back the balance of my time, and I turn to the gentleman from Oregon, Mr. Bynum, for 5 minutes. Ms. Bynum for 5 minutes.
All right. Thank you, Mr. Chair. I want to start off with just kind of a foundational belief I have. This big, beautiful bill is trash. But thank you for being here today. I was just saw firsthand
Oh,
that
gosh.
businesses across the
That caught me
country,
off guard.
across the state, were worried about inflation and rising costs, particularly for our state where we make chips, we
Oh, that's
import and
funny.
export agriculture, and we have apparel. So just want to level set there. My Republican colleagues have actually been focused today on asking you to lower interest rates, but they're seeming to ignore the market chaos that the president has caused. So my first question is, it's my understanding.
I don't know if
that
she was clear enough.
one of
Yeah.
the key responsibilities of the chair of the Federal Reserve is to stabilize prices and fight inflation. Is that right?
Yes.
By my
Markets
count,
are just
the
launching into
president,
orbit right now.
President Trump has changed or announced a new tariff or a delay of previously announced tariffs 19 times. And so has the president's ever-changing tariff made it easier or harder to stabilize prices and fight inflation?
So I by practice, never comment on things the president does or says.
Has the administration's policies on
Or the
tariffs,
Let's go. Oh my gosh.
has the change in policy
See what you did there.
on tariffs made it easier or harder?
So it's not up to us to judge these changes. These are things that elected politicians get elected and do, and it's just not our job. You know, our job is to provide stable prices and maximum employment to the public.
Much as a Disney seeing
that's what we
continued
do.
activity,
So
new
we
highs.
do
On
expect there
Josh
will
Brown,
be,
positive comments, CNBC, DIS.
a set of price increases from some of the price increases from tariffs will flow through to the consumer. We don't know whether that will be persistent or how large it will be, but right now we're kind of in watch and wait mood until we have a better sense.
Is your sense that back to school will be affected, the holiday season would be affected? You mentioned it a little bit earlier on how you didn't say the exact time frame, but you thought maybe a few months we would start to see changes from
Well, I think
tariff
we're going to be learning as we see. We'll get a
This
before the
O2
July
needs to
meeting,
disappear,
we'll get
whatever this is.
Inflation report well before that. And, you know, we're going to be looking to see, we expect to start to see meaningful increases through the goods channel. And if we don't see that, then that'll be telling us something. We'll be learning.
Yas.
Juice. By the way, we'll also be looking at the labor market. If it weakens unexpectedly, we'll be looking at that too.
Trying
We'll
to
continue to adapt to the evolving situation as we have been doing.
50-50 on 50.
So what
Bagga,
market
let's go,
conditions
bud.
would make it so that the
50
Federal Reserve would
months.
be able to lower interest rates, which would also lower costs?
So as I just mentioned, I would say if we were to see that inflation is not coming through as our forecast and other public forecasts have suggested, that would push us in the direction
So many
of being able
dings,
to cut
I know.
sooner. Also, if the labor market were to weaken,
Can actually mute there.
that would push us in the direction of being able to cut sooner. I think if the opposite happens, if the labor market
Or
remains strong,
lower
we'll
down.
see higher inflation.
I got it set for just high a day
We'll
now.
still get around to cutting, but it would be later rather than sooner.
This is ideal. If you get just a weak cuck right here, if this holds up, candle over candle through this level.
From the Federal
Come on.
Reserve?
Stable prices and maximum employment. That's what we want to deliver. And, you know, we want people to feel so confident of price stability that they never think about inflation. That's where we were for a very long time. And we've made a lot of progress back to that place, but we're not quite there yet. And we're gonna finish that job.
We like slow cooking
Comments out by New York
people's
Post says weight loss
savings,
drugs like
not this
Ozempic may prevent
flash in the pan
dementia.
stuff. We want their savings to deteriorate slowly so they don't notice it,
Discuss the administration's priorities or policies.
like a frog being
I'm gonna
boiled.
quickly switch gears here. It seems to me like you're under a lot of pressure from the president to address the national debt. True, false?
Jay Powell, when he gets out of here,
Are you under pressure?
he's
from
gonna
the
have a number one
president to
bestseller.
address the national debt?
So our role is maximum employment and price
When
stability.
he's done
Fiscal policy is responsible.
and he writes his book,
Congress.
everybody's gonna want a piece of that, and he's gonna unleash. He's got years of built-up
I
angst
think that despite all of the
and abuse.
talk about national
He's gonna
debt,
unleash. There it is.
this big
Freaking A.
beautiful trash bill.
Beautiful
continuing
trash
to do
bill.
that will actually raise the national debt. So, thank you for answering the questions today and
Freaking
continuing
love
to,
it.
to work to lower costs. for
General ladies'
American
time has
families.
expired.
Thank you.
Thank you. The chair now recognizes the gentleman from Kentucky, Mr. Barr, who
Beautiful
is chairman of the
trash
Subcommittee
bill.
on Financial Institutions for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for the
that
generosity
an
of your
0-2
time
again?
at the witching hour, but appreciate your endurance. And with respect to my friends, the gentlelady's line of questioning, would a recession that would potentially result from a massive tax increase, a $4 trillion tax increase, would a recession help the debt and deficit picture?
No. Tax receipts would go down and all that.
Yeah, so I think this sky is falling scenario about the one big beautiful bill, we have to put into context, and I'm not asking you, Chairman Powell, to comment on this, but this is my editorial response to my colleague. A massive $4.5 trillion tax increase that would put us into a recession is not a recipe for fiscal discipline. Chairman Powell, let me switch gears to tariffs. Governor Waller argued in a speech earlier this month that tariffs
Bulls had their opportunity here, didn't do it.
Just a one-time
Do we come
price
and
increase as
break
opposed
this
to
first?
increasing long-term
Or are we
inflation
gonna
expectations.
try it again?
Especially since this Congress has not pumped massive spending into the
250,
economy as Democrats did under President Biden. On this issue of a one-time price increase versus inflation expectations, do you generally agree with Governor Waller's analysis?
So I do agree that basically, if things are a one-time increase, then you don't respond to them. That's the whole idea. Is there's a shock to prices. It could be an oil shock, could be a tariff shock. Generally speaking, you don't respond if you are highly confident that it will just be a one-time shock. I think the current situation though is a complicated one, and I think
OpenAI is snatching Microsoft customers.
Like it's a decision we need to take with some care.
Rather than Copilot.
The reason is because price stability in 2018 and 2019 when the president's tariffs were put into place.
Rather than ChatGPT than Copilot, huh?
We cut rates 3 times that year because the tariffs were so much smaller. These tariffs are many times larger, and they do raise kind of more concern. In 2019, we hadn't had high inflation in 30 years. Now we're only a few years away from high inflation. So I think we think that they may well prove to be a one-time thing, but in the meantime, it's a decision we want to approach with some care.
I think we've made a lot of progress towards getting closer to that 2% goal. Does the Fed take into account the disinflationary fiscal policies like supply-side tax cuts, deregulation, and more energy production that could be a counterweight to whatever one-time price increase?
Say moving fast enough for me. I gotta watch this circle.
So we look at aggregate inflation, not any particular kind, and I'm very gratified at the performance of services inflation, which has come down now.
This
is
so tight.
Inflation. So I think overall the inflation picture is actually pretty positive.
Chairman Powell, we're looking forward to this rulemaking later this week addressing Treasury market liquidity. Can you talk about how banks are constrained from holding U.S. Treasuries and other low-risk assets on their balance sheet as a result of these restrictive leverage ratios?
Yes, when banks are bound by the leverage ratio, when that's the binding capital constraint, then that's going to make low risk, low return assets.
250.02. Whenever it breaks, it's going to juice it.
And so lots of
there it is.
low risk intermediation, including Treasury market intermediation.
Oh, now we got another one at 08.
To the point with capital requirements that you just see less of it. So I've always thought that it would be better if we had a leverage ratio that was a backstop rather than the binding thing. And that's what
how did it break 08?
Well, let me preemptively thank you and Vice Chair of Supervision Bowman for working on SLR reform to accommodate more bank holdings of treasuries to stabilize treasury markets. Finally, I'm pleased to see that the Fed joined its interagency counterparts and announced that you
I didn't see that at all,
plan
but
to consider
am I addicted?
reputational risk in your examation process. Senator Scott and I introduced the FIRM Act to stop the weaponization of the supervision process, to stop the targeting of politically unfashionable groups. Our bill requires regulators to focus on the true risks as opposed to political factors. What was the Federal Reserve's thought process in implementing this common sense reform?
That it's common sense, and I think this is an area where we learned over the last couple of years that there really was a problem here. The reports were louder and louder and more.
Now the
troubling.
bids, huh?
we just thought, let's take this
Oh,
off the
that's
table.
the break.
It may
I was
may
hoping
have
it would
been
go
Gentlemen,
up,
intentional on the
but
part of the banks that just there was so
break
much.
down if you were
it was just
short
such
and
a-
you banked on it.
Time has expired.
fraught issue that banks turned away people with which they didn't intend to discriminate. That's what the banks.
Thank you for
Chair
helping to
will
depoliticize the
announce
banking
to the
system.
membership,
I
we
yield
will
back.
recognize Mr. Torres and Mr. Loudermilk, then adjourn for our 1 p.m. agreed to hard stop time. And with that, the gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you. Chair Powell, you spoke about elevated uncertainty and declining sentiment in the U.S. economy. Do you believe, as I do, that the economy would be in a better position but for the elevated uncertainty and declining sentiment created by the Trump tariffs?
I don't want to be criticizing policies. I will say, uncertainty has.
Is it fair that it's fair to say that the policy created uncertainty?
It's fair to say uncertainty was very elevated, but it's also fair to say that uncertainty has actually come down since the peak, if you will, in April. I think there's a different feeling out there now than there was 2 months ago, and it's more constructive feeling on the part of businesses, which you must be feeling too.
But it's higher than it otherwise would be in the absence of the Liberation Day tariffs. To what extent was the elevated
I
uncertainty
just laugh every time I hear
keeping
Liberation
the Fed
Day.
from cutting interest
Whoever
rates?
put in chat at that time, Liberation in my portfolio.
The truth is, we were cutting rates, and we paused in January and haven't cut rates since. And really, the reason is that we, like other forecasters, do expect a fairly substantial wave of price increases to come through to the consumer and to measured inflation. We've always said the timing, amount, and persistence of all that is highly uncertain. I think we hadn't expected to see it until now. We now begin to think it is time for us to be seeing that, and if we don't see it, that will matter. If we do see it, that will matter. So we've just taken a cautious approach to not moving our policy rate until we have a little more confidence about the size and likely effects of that.
Chair Powell, following the so-called Liberation Day tariffs in early April, we saw something the U.S. economy had not seen in decades, a flight not to the U.S. dollar as a safe haven, but away from it. And since President Trump's inauguration, the U.S. dollar index has fallen by nearly 10%, marking the worst first-half performance for the dollar since 1986. At the same time, Japan, America's largest sovereign creditor, just saw the worst 20-year Japanese government bond auction since the 1980s, raising fears that it could reduce its holdings of U.S. treasuries. Given these developments, do you believe, as I do, that the U.S. may be transitioning from a period of dollar dominance to a period of dollar decline?
Well, let me say, the Fed does not have responsibility for the dollar. That's really the Treasury. But
I'm asking for your analysis.
I wouldn't make that statement. No, I think it's things have been volatile. The markets are digesting things, and I think the Treasury market's been fine by many measures. The dollar is still.
You feel the safe haven status of the dollars is as strong as it's ever been?
I think the dollar is still the number one safe haven currency, and I don't think it's. I would say these narratives of decline are premature and a bit overdone.
I want to ask about the debt. The big, beautiful bill would have ugly consequences for our nation's finances, adding more than $2 trillion to the debt if the provisions are temporary, and far more if made permanent. We've accumulated World War II levels of debt, not during a world war, but during peacetime. Interest payments on the debt have become the largest item in the federal budget after Social Security, surpassing Medicaid, Medicare, and military defense.
That's
to what
crazy.
extent is the U.S. at risk of entering a debt spiral?
Number one
in
line
which
item is
rising interest
freaking
costs lead to ever larger deficits, which in turn
interest
lead to
on the
ever
debt.
larger interest costs.
Yeah, I think that the U.S. federal budget is on an unsustainable path. The debt is not at an unsustainable level right now, but the path is not sustainable, and I think the sooner we deal with that, and by we I mean you, the better.
The Trump administration has championed the
Damn right.
military
Give it to him,
executive
pal.
theory, the notion that the president has absolute power over all entities that wield executive power. That theory, if taken to an extreme,
The problem
will
is
abolish
nothing
the
will
independence
get
of the Federal
done
Reserve.
on
If
debt
monetary
spending
policy
until they
became
have
nothing more
to.
than an expression
Like a
of
crisis in the
presidential
bond
will
market.
and whims, what havoc would that wreak
Because
on the U.S. economy?
anybody that tries
think that
to fix it,
independent central banks have proven over
you're going to
time
lose
be a
in
valuable
a landslide your next election.
and critical institutional
And power ain't going to do it.
practice.
And I'm like,
And
well,
I think that is because
guess I'm not doing it
basically
then.
advanced economy
So
and
that's where we're
democracies around
headed.
the world have given
So
their
easy to
central
see.
banks a degree of operational independence.
The only thing
They
that save
assign
us-
them goals, you go do this, and you stick to those things.
AI.
But we'll let you.
Our-
You may
our Lord
choose
and
the means of
Savior,
achieving those goals.
Skynet.
Instrument independence, but not goal independence. And I think it's a very
Gentleman's
important,
time has expired.
very important practice.
Gentleman's time has expired. Chair now recognizes our last
I am an oracle.
member of the day, the gentleman from Georgia, Mr. Loudermilk, for 5 minutes.
Well, thank you, Mr. Chairman. Chairman Powell, it's good to see you again. And I'm going to be brief, so maybe we can get out of here right at
So those
time.
golf outings cost these days.
As some of my colleagues know, I chair the bipartisan payments and fintech caucus along with a fellow Georgian on this committee, Representative David Scott. And in the past, you and I have talked about payment-related issues like FedNow, but today I'd like to ask you about the failure of
What's up,
Synapse
Pizza
Financial
Wrangler?
Technologies, a
You
third-party
doing, my
service
man?
provider that connects banks with non-bank fintechs, and what it means for the bank and the non-bank ecosystem. Last year, a dispute between Synapse Financial Technologies and Evolve Bank and Trust revealed a shortfall in customer savings deposits of $65 to $95 million. There are still thousands of individuals who are not able to access their funds, including some of my constituents. So the question is, could you provide an update on what the Federal Reserve is doing to ensure that customers regain access to their funds? And is there anything that the Federal Reserve
It's XRP
is considering to
breaking
help
some
prevent
levels.
situations such as this going?
Daddy's long in XRP right
I
now.
don't have a lot of specifics for you on that. I am assured that we're still very much.
Got pretty lucky. You bought it
doing
at
everything we
204
can
and
to
it's
try to get
juiced.
people their money back and to avoid similar
221 right
occurrences.
now. Give it to Dad.
Okay. Well, I said I was going to be brief, and that was a brief answer. So with that, I yield back, Mr. Chairman.
Gentleman yields back. The
Yeah,
chair would
Bull's
like
holding
to
up.
Thank Chairman Powell for his testimony today. And without objection, all members will have 5 legislative days to submit additional written
All right,
questions.
that's
for
all of that. Ba-da-ba-doo. Ba-ba-da-ba-doo. Go, gadget, go. Do, 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 do. We're 1% away from all-time highs. What a wild year, man. 1%. Someone remind me next time. Well, you know what? You would have gotten caught here. I was gonna say, next time you see a failed break down like this, to take it. But it would have stopped you out over here. I like it, Cosmo. My number is like if I lose half my profits. That's kind of my number. Hey, it's a good problem you got, though, bud. It's a good problem. Most people will have the problem of getting profitable. You have a problem of keeping the profits. That's a good problem to have. And I'll throw this in there, Cosmo. When I get to close to like losing 50% of the profits on the day, I also cut my size back. So I can get like a little snowball effect, get a little cushion against that half profit loss, or stop, I should say. And then it'll increase again the further I get away from that, day stop. Blazing Heart. That sounds like every trader, my man. You'll get it. You just got to stick to your rule set. You got to stick to your rule set. You go big when you're winning. The thing that, I used to tend to have the problem of holding longer when I was green, looking for a bigger move, when in reality, I should have just kept doing what I was doing and increased my size. And I think that's helped me quite a bit. You've seen me do it today. Coin, an absolute beast. Jeez. I did today because I have spiral problems that I'm working on. It was up 1,800 at one point, was trailing it up, just hit 15. Stop. Hey, that's a great day, Cosmo. Freaking A, dude. One's in chat if you wish you could have a $1,500 green day. Like stress-free there, bud. I'll be the first one. Yeah, I mean, Cosmo, don't beat. See, this is the balance of being a trader. You're all witnessing right here. Cosmo's beating the shit out of himself right now, and he's up $1,500 in the day. Like, to say that we don't fight mental demons as traders. Nice work, Rat. Yeah, most of my stocks are over 5% moves, and I didn't make as much as I should. You can't. That's hindsight stuff, dude. You have no idea where a stock's gonna go. No idea. You got to stick to your rule sets, have a plan, and stick to it. If you feel like things have range, you can always hold a little piece, get a piece of that range. Scale out. But you have no idea where they're gonna go. Zero control over that. Background music? Pizza. My background music is high beta squawk in my ears. OG Chuck just giving me the goods. Chuck Jones breathing like Darth Vader. trade exchange popping off. That's my music. Yeah, the same problem, Rat. Yeah, if you're looking for a more win and you're like up, just don't hold longer because then you're changing what you were doing that got you there. Just increase your size. That's what you got to do. What's up, Anthony? When you are in the red and trying to hold for break even, but then oh yeah, you got to stop out. You got to stick to your game plan. She's the mother of God to pop. Who is this? The Eli Jimso? Oh, you're starting some shit now, huh? It's also your background music? Yeah. 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 God. Pope? Someday you're going to end up in jail. And you're going to be roomed with Bubba. You're going to think of me when you look deep into Bubba's eyes. And Bubba's actually going to be me, reincarnate, because you're no doubt going to kill me. So when I come back as Bubba in your jail cell, no. It's my time. Bubba. Don't worry about it, noob. Don't worry about it. Don't worry about it, noob. Dude, coin is on another level. It's up 33% in 4 days or something crazy like that. What is this? 37%. Oh, really? Stokes and Arsenal both are at the top. I short profit 9% of the time. That's smart. That's smart, pizza. A lot of program trading uses those two indicators. Excuse me. WFF is at low a day now. That might maybe screw up that chart now. EYN tapped near high a day. Oh my gosh. Iranian president Pezeshkian, murdered that one, congratulates great victory to Iranian nation. See, it's all face saving right now. Even the stuff last night. It's all everybody posturing. Gotta get their face saving whatever's out there. Exactly. Let him face save. I don't give a shit. Just want it to end. And I will say this, I'm going to pat myself on the back. I called yesterday perfectly. Not my trade idea, but what was going to happen, the two routes. We hit them. Okay, now the response. Are they going to hit an empty military base because they let us know? It's the same script. And I was listening to the news yesterday as well after the fact when I was driving around. And it's exactly what they did when we killed Soleimani. Was that his name? During Trump's first term? Same exact thing. We killed that dude. They let us know, fired at an empty base. All the missiles were basically intercepted. They get their win. We got our win. Everybody went home. It's the same freaking thing this time around. Now they just need to freaking not start this shit up again. So we can go figure out something else to complain about. Thank you, Kutrin. And put my money where my mouth is. As soon as I heard that Iran let us know, that was my key. I went full port. I don't have any more gunpowder. It's all long right now. And I got that huge gap up. I mean, that's pretty crazy. I don't know what's going to happen here. Do we just keep juicing, or are we actually going to respect the upper Bollinger Band here on the daily? Now, I don't know what's going to happen now. Someone's going to try to get some more punches in before the bell. I don't know. Does the ceasefire last another 5 minutes and then back at it? I don't know. I'm not making any predictions today. CRCL. Damn. Is this going to be the first daily cock? Are we going to get it? I really should have waited for a bounce. I mean, this is a $10 drop, but... Watch it cock. Watch it cock. What is it? 232.50. That's the level. Hello? right there. Cuck here would be a 25 break. There it is. It's got to push the 235 now. It's trying. Broke. Broke. Bounce. Ask keeps walking down. $33, and then it's on. Historic speed. Right through the daily cuck. See if we bounce here. I only made $200. $300 are at $4. That's insane. I didn't realize how tight this was up here. Damn. So, retest the 9 EMA. Price really needs to stay under here to get juicing. A lot of volume on this pullback. Let's see what happens. Spy. Warren's baseline Trump tariff with still retaliation. That's your dump there on the market. The hell?
Yo, it's Lord Fart Quad up in this beach, trading mad stocks with Gollum up at the peaks. His massage parlor, that's his precious Agnes and Ruth, keep her from stressing. Oh Billy, oh Billy.
So stupid. Here's your 2:30 break incoming. See if we can find some levels here. It's a big one. Get rid of all this crap. Yeah, that's a real big one. 2:30. All right, now it's got to fight over this 2:30. If that 2:30 break can hold, I mean, like 2:15, is that what we're talking? Oh, that's all worthless. My God. Nay! Within 12 months, kind of a ways off, so I don't expect too much out of this. It looks like I'm a little late to the party here. Yeah. What's the hard to borrow fees on this? Hidden buyer here? The hell are we doing? Yep, of course. Of course. Perfect place for a hidden buyer. Stop it with these stupid pops. Again, I get filled at 60. Here's the pressure. Can't break it. What is this? Who's buying here? And third time's a charm? There it is. Gonna hold it. What? Freaking A. Watch the Stokes on RSA later. You know, I didn't look at it. I do follow the MACD on the 1 minute here. And that rejection. Data check's been a little slow today. On some things. Cool. That's what I'm looking for on bull. Might be something there, right? Oh my gosh.
Traits at the break of dawn. Long black hair, sharp suit on. Shorts go green, his guts go too. Bathroom breaks, more than a few. He buys, sells, wipes, swears. A market beast with bowel affairs.
At least he's singing truths, right? Oh, freaking A. How is this not getting filled? What's up, Canes? I changed the time. 220. Yeah, man. It's just scale. Just scale. Damn it. That was a cock and drop and it didn't go. 225 looks like it's going to be defended. Shit! Whoa! I reversed the stock again, boys. Yeah, SPY don't care about no EU tariffs. SPY just says, we want up. Thanks for the dip. For crying out loud.
Dr. Soils roams the freezing tundra. He plants his seeds in summer. Some seeds more frowned upon. Smiles wide before the break of dawn. He pulls his weeds, only the ones that don't make him money.
Damn it! That's the move I was waiting on. Oh, it's gonna bounce again. Oh, SJ's in. Yeah, bounce that shit. DC, did they go high day? About to, isn't it? Oh shit, it is high day. And top tick. I thought 10 was the high day, but it was actually 8606. So deal on that. No, that's not program. It's just an audio notification for high day. That's all it was. This thing is just screaming, come on down. There's a gap down here to 200. I mean, I would not be surprised to see this today or tomorrow, whatever. It's where it should be heading. Put a fib on it. We're at the 50% right now. 220 lines up with 220 psychological level. After that, you're talking 200. So 220, if that breaks and holds, you're talking 200, I guess. That's my guess. With Twitch Turbo. You get wrecked. $48 months, Looney. 48. 4 freaking years, boys. It's dedication. Looney's gone into hiding because he's become so good looking over the years. Don't blame him. Man used to walk down the street, no one would bother him. Now, women throw themselves at them. Men, too. They all want a piece of Looney. Never seen a man so good looking. Oh, is that good or bad? I don't know how to read that. I don't know if that's good or bad.
Being in or out of a self-imposed quiet period and why that might be.
NNE. Juice. Jeez. I don't know if that's good or bad. Okay. Well, it worked out. NNE going for that 40. Calling it here, boys. $4,400 a day. I tried to make $50 and I ended up losing $500. So that happens more times than I can freaking take, but good day. Just trying to get that 5K day back. We're going to go raid this person with one viewer. I'm not even sure it's a real person. Like, it could be a video, but nonetheless, this is where we're going. I got some errands I got to run. We'll be back at it tomorrow. Same time. I ain't waking up early for this shit. Market hours have been fine. There we go. That's right. That's right. All right, guys. As always, DMs are open for questions or comments. Hit me up if you have, if you're struggling or whatever. It's also places in Discord where you can post your charts. Say, take a look at this trade. Help me out. People are willing to help. It's free. See you tomorrow.